markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Cautious trading ahead of the December inflation report tomorrow. The S&P 500 sits just about 40 points shy of its record at 47.96, touched a little over 2 years ago. And for this bullish narrative to play out, inflation must be seen continuing to fall back to the central bank's 2% target, according to analysts. Crypto-related stocks, they're slipping as Bitcoin retreated after the SEC chair Gary Gensler denied the agency had approved spot Bitcoin ETFs yesterday. But today, of course, is a deadline to okay spot ETF. As we look at Bitcoin right now, $408 lower at $45,018. As far as the major stock indexes, S&P 500 pairing some of the earlier gains. Right now, 5 points higher. That's up 0.1%. We're at 47.61 on the index. Dow Jones Industrial Average up 31 points. And the NASDAQ 100 right now, 17 points higher. That is up 0.1%. The benchmark 10-year yield right at 4%. The two-year yield, that is down 1 basis point. We're at 4.34. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Lisa and Paul.
All right, John Tucker, thank you so much. We appreciate that. Lisa Mateo, Paul Sweeney, we're live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube, so head over to youtube.com and search Bloomberg Radio. All right, Lisa, I type in ECO. That brings up the economic calendar. We got some inflation data coming out this week.
Yeah, I heard about that.
I got some CPI mañana, and then Friday we've got PPI. So lots for the Fed to chew on here. Let's check in with somebody who's going to be paying attention to this data. Neil Grossman, he's co-founder and former CIO of TKNG Capital. Neil, I think my Fed has done a pretty good job here. Do you think the data this week is going to bear it out? Or, I mean, maybe they were a little bit late to the party, but I think they kind of did a decent job. But what do you think they're going to look at here this week with the CPI and PPI data?
A couple of things. Let me just go back to last week one moment. The employment data last week, again, it continues to be surprisingly good.
Yep.
The 12-month trailing average of job creation actually went up with that number. It's about 240,000 a month, which is an extraordinarily strong number from any historical perspective, except for the post-COVID period. And you know, I've been looking at next month's number, and you know, based on the statistics and looking at things like claims, I think the employment sector is continuing to do very good. I wouldn't be surprised to see a very strong number next month. So, from an economic standpoint, this economy continues to do at least reasonably well. I know there have been some weak sectors, but even those are starting to perk up because of what's happened with rates. So, I'm somewhat confused about why the Fed felt it such a rush to promise rate cuts when the general economic environment is more than acceptable. You're basically at full employment, and inflation by most measures are still, except for the very short couple of months, are still not only above where they have historically been in their target, but when you look at the last 3 years, and you see this when you talk to people, the fact is that we're still 25 to 30% above, or whatever the price point. I think we've averaged over 5% a year, so we're about 20% above where we were 3 years ago. That's still hitting people. So I think this number could be either way. I mean, last year's number was I think 0.1. So the odds are that you're not going to get any month-on-month improvement this period. You might get a little deterioration. The next couple of months, for what it's worth, are likely to see somewhat lower headlines because last year, February and March reports were weak. The real question ultimately is you know, I know the Fed has made it clear that to them, getting to 2% near 2% is panacea. I don't understand why that's sufficient. They need to get to that level and make sure that that prices stabilize at those levels for an extended period of time. It doesn't really do you very much good to get to a level and find out because you've provided too much liquidity and started easing that the prices are going to start to rise.
Now about goods prices, issues in the Red Sea. We've been hearing a lot about it. It possibly could affect supply chains. When will we start to see that? Or maybe if, we will start to see that, will it affect any numbers in the reports?
I'm sure it'll have some effect. I mean, any goods that were being shipped through the Red Sea and now are making the longer trip have a higher cost, and of course insurance. But I don't know how much of a I mean, you'd have to look at historical times, but whether that's going to be the be-all and end-all to making more than a tenth or so of an impact. Oil, of course, on the other hand, could become a big problem. And the bigger issue is does this begin to escalate in a broader sense? And that would be, of course, a big problem.
What did you make, Neil, of that big move we saw in financial markets there in the last 10 weeks of last year? We had the S&P rip 15%. We had 10-year go from 5% to 3 and change. What was going on out there?
Well, again, I think it's all tied to interest rates, right? I'm going to forget which exact meeting it was. Was in October, Mr. Powell, or Chairman Powell, started to lay the groundwork for changing their tune, and then.
Do you think he made a mistake? Do you think he meant to do that? Do you think, or did he kind of say?
Well, based on his December testimony, yes, he did. I mean, I think we talked about this last time. I almost fell off the chair when he sort of said, it's a bad idea for us to wait till we get to target until we start doing something, because that means we're likely to overshoot. Although I don't understand why anyone would be so upset about a 1.375% inflation rate. The other question I think we talked about, and I don't know if you've thought about it, but I took away from that, it's quite possible that speech was also designed to redefine what their target is. I mean, we've spent the last 3 years talking about whether 2% should be the right rate, and for the last 2 years, Mr. Chairman has been saying, well, we don't want to talk about that. Maybe they are laying the groundwork for arguing that the economy should operate at a higher rate of inflation than 2%. If that's the case, you sort of understand why an asset class that thrives on inflation, or more than modest inflation, with a lower rate environment might be very happy, at least in the short run. The question is, in the long run, is this going to be very good? I don't know.
And where do you see about shelter inflation? I mean, that's the largest component of the index. Where do you see that for tomorrow?
I don't know what the number is going to be for tomorrow. I do think, look, they've been talking about the the owner's rent equivalent, or equivalent rent, having embedded, lags and are likely to come down. But you can look at a few other things. The problem is we do have a significant housing shortage in this country. Number one. Number two, this drop in rates, you're already seeing it in mortgage refinancing, and you're starting to see a pickup in housing activity. So you're likely to see, with that sort of combination, prices have a bias towards starting to rise again, which we'll see what that leads to. Again, the question is, are we really in a healthy inflation environment where this is just going to stay low and not go anywhere? Or is the combination of excess liquidity from the Fed? I mean, financial conditions in the last 10 weeks have, as you were saying, just have eased, and they're about as easy as they've ever been. The government still continues to spend staggering sums of money, and so it seems to me that there is a risk that they provided and made the conditions appropriate to have a higher inflation environment.
All right, so we ended up 2023 probably better than most people would have thought, certainly from the beginning of the year. Yeah. What do we do this year? Where's the opportunity here?
It's look, you've got a handful of stocks that were essentially rescible for a large part of the move.
Although we saw that breadth
broaden
out towards the end of the year.
And tied to rates. So if we are going to be in a benign inflation environment, the government manages to stay out of the way of causing problems, I suspect that you're going to continue to see the broader echelon of stocks do better. Certainly the risk-adjusted returns are probably going to be a lot better.
So, I guess one of the issues is just simply, I don't know, 2-year Treasury, 4.3%. Is that still a trade for people?
Yes. In fact, actually, from my perspective, the interesting trade in the rate markets is actually a curve steepener. I'm not as clear as to why the long end of the yield curve continues to do what it's doing.
Yep.
Even if the Fed's going to get, even if inflation's coming down a bit, you have absolutely no term premium, and so it seems to me that one of the trades I've been playing with is exactly that. And if you go way back, I mean, it's not uncommon for the yield curve to have 200, 300, or 400 points of steepness in it. And particularly with the government's funding issues continuing to rise and need to continue to place paper, one would expect that if you have an easier Fed, that you're going to have the long end take the brunt of that.
What's new at the Vineyard?
Well, last year was an unusual year. We ended up with a major frost in last May, so I didn't have a lot of grapes. But the 22s are going to go into bottles soon, and they should be spectacular.
Road trip.
Okay.
I hear it.
Anytime you want.
Exactly. And so what do you do here in January when your vineyard is in, New York?
You drink.
You drink. Okay, exactly. Very good.
What kind of question was that?
No, actually, you don't have to do too much during the winter. The vines have been put away basically for the winter.
Okay.
They're there's nothing to go on. Starting around March, you start to prepare, and then, sometime in late April, early May, you get bud break, and then the real work starts.
Off to the races. All right, Neil Grossman, co-founder of TKNG Capital, joining us here for some smart discussion of the markets and of the wine business. Right now, let's head down to, where are we going to go to? Denise Pellegrini, she's got her, no. Amy Morris down in Washington, D.C. has got world and national news.
All right, thank you, Paul. The latest on the grounded Boeing 737 MAX 9, Boeing CEO David Calhoun says the company will have to face its own shortcomings as it's dealing with the door plug blowout on last week's Alaska Airlines flight.
We're going to approach this, number one, acknowledging our mistake. We are going to approach it with 100% and complete transparency every step of the way. We're going to work with the NTSB, who is investigating the accident itself to find out what the root cause is. I have a long experience with this group. They're as good as it gets.
Boeing CEO Dave Calhoun fought back tears as he addressed an all-hands meeting on the incident. Alaska and United Airlines say they've discovered more MAX 9 jets with loose bolts after the FAA ordered the model grounded. Senate Republican leaders say Congress will need another temporary spending measure to avoid a partial government shutdown in just 10 days. House Republican Matt Rosendale of Montana tells ABC he doesn't support the bipartisan compromise on spending caps.
We're still looking at about a $1.6 trillion spend in discretionary spending, and we're going to be holding a press conference with members of the House and Senate saying that we are more concerned with securing our southern border and making sure that that is taken care of than we are in writing another check to Joe Biden to continue his agenda.
Senate Minority Leader Mitch McConnell, though, acknowledged there's just not enough time to resolve these spending differences before the deadline. Hunter Biden has arrived on Capitol Hill to attend a committee meeting, holding him in contempt of Congress. Republicans taking the first step toward holding the president's son in contempt after he defied a congressional subpoena. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and Lisa.
All right, Amy Morris, thank you so much. We appreciate that. We are going to be in just moments bringing you a conversation. Matt Miller and Alex Steele is going to have a conversation with the CFO of Volkswagen. So that'll be coming up in just moments, and we'll bring that to you. In a minute, we just want to get a little preview. Because, again, if you go on your Bloomberg terminal and you type in ECO to get the economic calendar, you're going to see we have some inflation data coming this week. CPI tomorrow, PPI on Friday. Certainly something that the Federal Reserve is looking at. Michael McKee joins us. He covers all the economic stuff for Bloomberg News, Bloomberg Television. He joins us here in our studio. Michael, what do you think we're going to see tomorrow, Friday? What do you think the Fed's going to be really looking at?
I was just doing a piece for radio, Bloomberg Radio, a few minutes ago, and I said that kind of the question tomorrow is who's going to care?
Okay.
And I don't mean that in the sense of it's irrelevant. The Fed isn't going to really care because they've already told us they're going to hold steady. And by the time they have their next meeting, they'll have 3 more CPI reports. So it isn't going to make much of a difference to them, but it could make a difference to the bond market because we're we should see headline CPI rise a little bit, basically because inflation was so low in December of 2022 that just the base effects make that happen. The core is expected to go down, but last week we saw in Europe when the headline went up and the core went down, the bond market kind of over there freaked out a little bit. The futures market, those betting on ECB rate actions, changed their views of how often and how early the ECB would move. So you, I suppose, could see that here if people get nervous about what it means. Now, this has been talked about enough, and we know for a fact, right, that everybody on Wall Street who trades bonds is listening to this program, that this is already in the price and it won't affect people, but we'll see.
Now, CPI, gotta hit the button. CPI.
I can hear you.
There you go. What sectors are you expecting to drive the most?
Well, the headline number will be driven in a large measure by gasoline because gasoline prices going down and they've continued to go down. They have a big impact on it. Then in the core, which also goes into the overall, but you're looking at cars, used and new cars. Those have been falling. It'd be interesting to see what happens with airfares. Airfares have been falling because this is not the time that people pack up and go to Europe for their summer vacation. Hotel rooms, this is also not a big travel business time, so we could see hotel rooms fall in price. And all that could contribute to the lower core rate. Then the question is what happens. The big question is always lately what happens with real estate, because home prices have been going up and the expectation is that they would go down because home price activity had dropped off, but there's a shortage of houses and supply and demand. Home prices have stayed high, and this is all measured through rents, and rent prices have stayed high. So unless that comes down a lot, we're not going to see a major change in what people are forecasting.
And where are we with just the recession call, the ever-present recession call? Has that kind of been really put on the back burner, given what we heard from?
It has been put on the back burner. Right now, most economists think we're going to avoid one. The forecasts have ranged from about 1.5% growth this year to maybe 2.5% growth this year, which is not a recession. It's not as good as it was, but it's not a recession. So at this point, people are kind of looking past that.
All right, very good. Michael McKee, thank you so much for joining us here again. We got some inflation data coming over the next couple of days, and we'll stay on top of that. It's Michael McKee, covers all the economics for Bloomberg News in just moments. We're going to bring you some interesting car talk, if you will. We're going to have the CFO of Volkswagen talking about the auto business, the transition to EV. It's something that Volkswagen, as all the OEMs, are dealing with here. Also talk a little bit about the business in China, because we're seeing the Chinese EV makers very competitive there, and we're seeing some weakness in sales from some of the U.S. automakers in Japan. I'm sorry, in China as well. So interesting discussion here, and of course, it'll be Volkswagen is such a global player that it has ramifications for the whole industry. So we're going to join now our colleagues, Alex Steele and Matt Miller, for a conversation with Volkswagen's CFO, Arne Antlitz, and we'll join that right now. Take a listen.
We welcome now our Bloomberg TV and radio audiences. We have been talking about all the AI innovations that's on offer at CES. So now we want to turn to innovations in the EV space and what's going to encourage more people to actually plunk down money to buy them. I'm joined now by Arne Antlitz, Volkswagen Group CFO and COO. Volkswagen is home to portfolio brands of Audi, Porsche, Lamborghini, and Bentley. And Bloomberg's Matt Miller is also here, back from paternity leave for one time only. Matt, by the way, congratulations. It's so good to have you.
Thank you very much. I'm very happy to be back, and I'm happy to talk to Arno. I have a long history with Volkswagen myself as a driver, as a fan, and the brand here. I mean, I've been to the factory in Chattanooga. I've been to Wolfsburg, obviously a lot in Germany as well. But the brand here hasn't really picked up in a way I would have expected with some of the new products you've had in the past few years. How do you plan to build a bigger presence in America?
No, thanks for having me here, and it's a great question. Look, where are we coming from? Look, as you said, we have some of the broadest and most fascinating brand portfolios in the industry: Porsche, Lamborghini, Bentley, Volkswagen, Ducati as well. We have a market-leading position in Europe. We have a strong position in China, but yet we have only 4% in the US in terms of market share and 5% in North America. So what's the reason? You need great products to be successful locally, but you also need scale. And in the combustion engine world, we never really had the scale. And now the market is turning electric, and this is a great opportunity for us to grow. We have all the ingredients we need to grow successful. We have great products with great heritage. We have the technology. We decided on a local battery capacity in Canada, Ontario, which will be very competitive. We have the financial resources and the will. So this is really our time to grow. And there's also, in addition to that, there's a once-in-a-lifetime opportunity with our new brand, I would say new brand Scout, to enter one of the most promising segments in America, the C pickup, with an all-electric car. So
what, can you give us any more details on that? I mean, International Harvester Scout, it's a very storied 4x4 from the 60s, and it's been away for a long time now. Scott Keogh, who ran Audi and Volkswagen here in the U.S., is taking over that project. When are we going to see the first ones on the road? Where are you going to get your battery supply for that?
No, I mean, as enthusiastic about the project as you. Scout has a great heritage. It will be an all-electric pickup truck in the C pickup segment, and also a B rugged SUV. Actually, I saw the designs just before Christmas. They are great. It's a really great car with a lot of heritage, but also very modern. It looks pretty similar to the original Scouts. We will produce it in North America. We will spend $2 billion on investment. The capacity will be about 200,000 a year. In South Carolina, and we get the batteries from Ontario, from Canada.
Are people going to buy them? What has been so striking is the lack of real pickup. Once you get the early adopters, where is all the demand?
No, you're quite right. We see some reluctance right now in Europe, perhaps also in the US. Early adopter board already, and now it's the next wave of customers. And of course, it depends on charging infrastructure. Is it there? Is enough charging infrastructure? Of course, of pricing. We had quite high raw material prices, so prices for EV are high. But we are convinced that in the long term, the market will be electric, and we have the great products. We will, by 2030, we will have 30 all-electric cars in the US. A lot of them localized.
Well, I wonder about if you could give us more details about the battery production, because I know PowerCo, which is one of your investments in battery production, is breaking ground on its first North American plant in Ontario. You mentioned you'll get your batteries for the Scout there, but Scout's supposed to come out before you'll be producing batteries there. So where will the power come from?
No, Scout will be one of the first cars who get the batteries from PowerCo. There might be a small part where we have to bridge some battery supply from Europe, but Scout will definitely be part of the customer group. And to elaborate a little bit more on our strategy, as you mentioned, so we are convinced that having our own battery supply in the company is very important. And it has really three pillars. One, a unified cell, then our own production, and we secure our raw materials. And this will lead to a very competitive offer in terms of battery. And Scout will be basically one of the first customers of that plant in Ontario.
You mentioned the investment there, $2 billion, and overall, Volkswagen Group has always had the most eye-popping numbers in terms of EV investment. From when D started until now with Bluma, I think you're planning on putting $130 billion into EV and digitalization. Are you still pushing ahead that hard? Because demand for EVs has fallen off. There's even a little bit of backlash, as Alex is mentioning.
This is a great question. Exactly as you mentioned. Our total spend, R&D CapEx combined for the next 5 years is $180 billion, and $130 billion of that is going into electrification and digitalization of our products. We're still absolutely committed to ramp that up, of course, but we also built in some certain flexibilities. So about a third of the upfront investment goes into combustion engine cars still. So we have a flexible strategy to keep our combustion engine cars competitive. So on the way, and we are fully convinced that the future will be electric, on the way, our strategy is rather flexible and provide also robustness and flexibility going forward.
This might be a really dumb question, but that just means like you're going to put money into ICEs and then you're going to take some of that money and put it into EVs and it's going to be like an easy shift. That doesn't sound very easy.
It's not an easy shift. What I said, from the 180 billion, about a third still goes into projects like keeping our combustion engine cars absolutely competitive, basically the last generation. So we will have a range of very competitive and great electrical cars. And we will have a range of still very competitive combustion engine cars. So, and eventually it's up to the customer to decide. So this is when I was talking about flexibility. So this strategy is a little bit more costly, but it will give us the flexibility in the years to come going forward. But don't get me wrong, the future will be electric, that's clear.
I want to get back to the brand, the Volkswagen brand specifically, and here in the U.S. You know, people think of Audis as, you know, very technical, cutting-edge vehicles. BMW, obviously, the ultimate driving machine. Mercedes, very luxurious in terms of service. What does Volkswagen mean to the consumer?
First and foremost, Volkswagen is a great brand. It's a loved brand. It has a great heritage. Think of the Transporter, think of the Beetle. And we will bring this heritage into the future. Volkswagen is also about democratization of innovation. For example, you mentioned the CES. From summer onwards, summer 2024 onwards, we will be, I think, one of the first OEMs at Volkswagen to bring ChatGPT in the car. You can talk to the car. So this is about Volkswagen.
I wonder what your relationship with the unions is going to be like here. You know, we've just had, obviously, the end to a long and painful strike for Ford and GM, as well as Stellantis, and now they're pushing in, or trying to push into BMW and Tesla and other foreign automakers here. Volkswagen, obviously, in Chattanooga, and you're talking about the Scout factory as well. Will you work with the UAW? How do you see that playing out?
Look, we have a great factory in Chattanooga. We have a great workforce there, more than 500,000 very skilled and motivated people. And they have great working conditions there. So we make sure they have great working conditions. They can participate and decide also in the factory without intermediate party. Of course, we respect our right of our workers to vote. But as said before, we have very good working conditions, very good pay. So this is where we stand.
You don't have to pay them more?
We actually increased already by about 11% some weeks ago.
Well, listen, it was really great to have you here. Thank you so much for coming. Matt, it's really great to see you. Thank you for bringing the interview to us.
Thank you so much for having us.
Well,
all right, that was Matt Miller and Alex Steele of Bloomberg Television sitting down with Volkswagen CFO Arne Antlitz, talking about the future of Volkswagen, talking about its commitment to electric vehicles. They continue to be committed there, and they're going to continue to invest in the transition to electric vehicles. So some good discussion there. We appreciate getting that from our good friends at Bloomberg Television. Right now, let's get a little bit of a reset to this market. We'll head over to John Tucker and get a Bloomberg Business Flash.
Yeah, real quick. It doesn't look like there's a lot of commitment on the part of traders ahead of the key inflation report, the CPI that we get tomorrow, Thursday morning. S&P 500 right now is 10 points higher. That's up 0.2%. We're at 47.67 on the index. Remember, 47.96, that's the number to watch. That would be the record for the broader index. Dow Jones Industrial Average, that is up 71 points right now. That is up 0.2%. 37,597 on the index. Yeah, the NASDAQ 100 right now up 57 points. That's a rise of 0.3%. 10-year yield holding right at 4%. The 2-year, more policy reactive there. That's down 1 basis point at 434. Now we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Lisa and Paul.
All right, John Tucker, thank you so much. Lisa Mateo and Paul Sweeney, we're here in a Bloomberg Interactive Broker studio. We're streaming live on YouTube. That, John, gave you the Business Flash. Let's get an update on world and national news, and we can do that down in Washington, D.C. with Amy Mars.
All right, thank you, Paul. Republican presidential candidates Ron DeSantis and Nikki Haley are taking the stage tonight. It's a one-on-one debate. Bloomberg's Anne-Marie Hordern is watching.
It's going to be a big test, really, of how far DeSantis and Haley are going to go in attacking Trump, who's deciding to skip this debate. He skipped all of them, and he's doing a big counter-programming because he's going going on Fox News, where a lot of Republicans traditionally watch, and him making his final pitch for these Iowa caucus goers to come out and vote for him.
Bloomberg's Anne-Marie Hordern reporting there. A new poll shows DeSantis trails most of the Republican field just 2 weeks before New Hampshire's presidential primary. The University of New Hampshire survey finds support for DeSantis among likely GOP primary voters around 5%. Former President Trump leads the field with 39%, followed by Nikki Haley at 32%. A federal appeals panel in Washington could soon decide whether former President Trump is immune from prosecution over his actions on January 6th. Bloomberg Government's Jonathan Tamari reports the justices did not seem to buy into Trump's claims at oral arguments yesterday.
We were waiting to see they could rule very quickly, possibly as soon as this week. And then once that happens, if they rule against Trump, he'll still have a chance to appeal up to the Supreme Court. So there's still a number of steps to take here, but it did not look good for him at the first hurdle here.
Bloomberg Government's Jonathan Tamari in the nation's capital. And the House Armed Services Committee is launching an investigation into Defense Secretary Lloyd Austin's secret hospitalization. Republican Mike Rogers says Austin must provide information about whether he directed his staff to keep his hospitalization under wraps. Austin was admitted to intensive care last week from complications from prostate cancer treatment. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and Lisa.
Amy Morris, thank you so much. We appreciate that. Lisa Mateo, Paul Sweeney, live here in our Bloomberg Interactive office. Darkening the door, as Tom Keene would say. Fresh from paternity leave, Matt Miller in the house. Matt, I saw you and Alex, you sat down and were chatting with the CFO of Volkswagen. I mean, he seems pretty committed to this EV thing.
Yeah,
they are all in, aren't they?
That was surprising to me as well. I mean, he is, first of all, Arno Antlitz has a very big job. He is the chief financial officer and the chief operating officer of the Volkswagen Group globally.
Okay.
So they run like 12 brands. They have not only Volkswagen, but Skoda and Seat, which are more European brands. They have Audi, Porsche, Lamborghini, Bentley, Bugatti, Ducati. So he's got a lot on his plate, but he's really focused right now on trying to build up the Volkswagen brand, the actual VW that makes the Golf and the Jetta, in the U.S., because it just doesn't have a very big presence here.
Which one of those have you driven?
I've driven
pretty much everything.
Almost every car I just mentioned, I think, or a car from each of those brands at least. I've only driven one Bugatti, but it was an amazing experience. With
that's not a car; that's a piece of artwork. I would argue.
16 cylinders, 4 turbochargers,
Only 16
1,500 horsepower, and I drove it around the track with the CEO in Bilsterberg in Germany. It was amazing, amazing, and that was a special edition $3.4 million car. So I was very careful with it.
Yes, very careful. So I mean, VW said they've got all those brands. They're a global company. I mean, where does growth for them come from?
Well, here is where they want to see growth. I mean, they did see, as a group, an 18% gain in total sales last year. So not too shabby, right?
Yeah.
But the problem is they want more, obviously, out of the Volkswagen brand, and they want to sell more EVs. Like you said, their commitment is real, right? They're investing about $130 billion into EVs and digitalization, just massive numbers. They're one of the biggest car makers in the world. Often they are the biggest car maker in the world. And they're fully committed to bringing on like 30 new models by 2030. So they need the consumer to still buy these electric vehicles. And as you know, that hasn't been going so well lately.
Right. Is that going to happen? That's the question. They have all this, money that they're putting in, and will it happen?
I mean, demand for EVs has really been slowing. Once the early adopters have gotten their cars, and once the rich people have value signaled with their third electric vehicle. I'm in the Ford F-150 Lightning this week.
Oh, you are?
Probably the one you drove.
Probably the one I drove.
It's a red one,
Yep.
It's very fast. It's very capable, but the reality is, if I were to buy it and put it in my driveway, I would need to get some kind of charging infrastructure installed, and I would have to go and find an Electrify America that isn't broken and doesn't have a long waiting line. It's just not a commitment I'm willing to make right now, and a lot of other Americans are saying the same thing for $80,000 or $90,000, which that truck is, it's the top-of-the-line model, but it's just too big
So
a
what are the
commitment.
car companies saying? I mean, Mary Barra's still out there, the Ford's still out there, the VW guys are still committed. I mean, they can't go back, can they?
I think it's, I just had my second baby, right?
Yes,
and I was over talking with some producers, and they were like, what do you think about this experience? And I thought, well, I can't go back. I'm already fully committed, so I have to raise this child. And I think, in a sense, that's what the car makers are feeling like about electric vehicles. They've already dumped tens of billions of dollars into EVs. They've already shifted their plans. Car making isn't something that you can change on a dime. It's a big ship, it's not a little boat. So they're already full in, and they just have to convince the consumer to come with them.
What about all the factories? I mean, can they do this turnaround? Can they turn these places into EV, makers?
Yeah, well, I mean, Arno was just telling me about they've broken ground on their South Carolina plant for Scout. The International Harvester.
Yes.
I mean, some of us are old enough to remember these 4x4s from the 60s and 70s that were so cool back in the day, but then disappeared for a few decades. They bought the brand. They're making it. They've already broken ground on the factory. Ford has already broken ground on a new factory for electric trucks in Tennessee. These car makers, they've already put the money down. They've already hired the people. They've already designed the vehicles. They're in. They can't stop it now.
So what do you think? I mean, you're the car person. You have a podcast with Hannah Elliott, right?
Thank you for mentioning. Why don't I plug my podcast?
Oh, brother.
So what do you
It's called Hot Pursuit. Hannah Elliott, a luxury
you're still
car
doing
reviewer.
it while you're on the...
Yes, I do. That's the one thing I'm allowed to come in and do every week, which is why I'm here today. So it comes out Saturday mornings, and Hannah talks about her luxury cars, and I usually talk about trucks and muscle cars, and we try and convince one another. But
what do you guys think about how this EV transition will go? How do you get that next layer, beyond the first mover people, the tech people? Is it really the charging station? Is it
You know what? To me, I think you could liken it to the .com bubble, right? Everybody was all in on tech and the internet in '98 and '99, and in 2000 it was like you couldn't sell that stock. But if you held on to Amazon, guess what? A few years later, or a decade later or two, you're a happy camper. So eventually, it's going to happen, but there are going to be fits and starts and some painful times.
Yeah, because I think the premium now for just going electric is too much for me. At least.
Yeah, wait. How's the baby, please? This is what I want to know.
Baby Lola. She's just turned 6 weeks old, and she does nothing but, eat, poop, and throw up. So
that's what they're supposed to do.
Yeah. I check to see that she's breathing every 5 to 10 minutes, and I don't get a lot of sleep.
That's right. Well, now she's got an older sister, Edna. What does Edna think of Lola?
Edna says that she loves Lola, but the violence with which she handles the baby concerns me, and she's never behaved worse.
I think it's time for a boy. We're gonna round this.
No, I'll never ever do this again. I feel like when you do the first one, it's so magical that you get through the tough times just on sheer joy.
Yeah.
But when you have the second one, the joy and the magic is kind of gone. So you're like, wait, why did I do this? I can't understand anybody who makes the decision to have a third child.
Exactly.
I'm never doing it again.
Not me. Congrats.
note,
Yes,
exactly.
congrats.
Someone with 4 children. So anyway, all right, Matt, great to see you again, my friend. We'll see you at some point in the future, I'm sure. Matt Miller, check out that interview with Arno. And the podcast.
Check out Hot Pursuit.
Yes, with Hannah Elliott. She is a luxury car person and great social media find as well. She's got great stuff on there. This is Bloomberg. Thanks, bud.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with George Ferguson. He's a senior analyst. He covers aerospace, defense, the airlines. we got to get the latest on what's happening with Boeing, because I have to fly a Boeing 737-900 on Friday. I'm not sure if my bird's going to be flying there, so I need the latest from George here. And then we're going to check in at the CES. Mark Douglas, he's the CEO of Mountain. He's going to join us from Vegas. He's going to be joined by Mark Penn, President Stagwell, and former Chief Strategy Officer at Microsoft. So there's some smart people. They're at Vegas. They're going to give us the latest of what's happening there. But first, let's kick things off this hour with Mr. John Tucker on the Bloomberg Business Flash.
All right, Paul and Lisa, traders in something of a holding pattern ahead of tomorrow's inflation data. The CPI out at 8:30 Wall Street time. Right now, you had 5 of the 11 major industry groups in the S&P 500 higher. Communication services in the lead, and that's where you're going to find shares of Meta and Google's parent, Alphabet. Craig Johnson at Piper Sandler sees the relationship, the leadership in the market starting to change to some lesser-known stocks.
2024 to us looks like we're entering an HLTR, or a high-level trading range, where this market is probably just going to end up consolidating. And as the market consolidates, the Mag 7 stocks are going to become the Lag 7 stocks, and we're going to see more mid and small cap stocks really start to pick up and perform.
Right now, the S&P 500, 11 points higher. That's up 0.3%. 47.68 on the index. 47.96. That's the number to watch for a record. Dow Jones Industrial Average up 65 points. That's up 0.2%. The NASDAQ 100, 63 points higher right now. That's up 0.4%. The yield space, the 10-year, right at 4%. Did get some data, mortgage demand across the U.S. picking up during the first week of 2024. Industry data showing mortgage applications posting the sharpest weekly increase in more than a year. And still have our eye on the oil space right now. NYMEX crude at 72.13. That's down about 0.2%. Traders weighing escalating violence in the Red Sea. So bottom line there in the oil market, the energy market, it's volatile. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Lisa and Paul, so nice to see Matt.
Yeah, it was so nice to see Matt Miller here. And I tell you, what gets him out of paternity leave is just to talk cars.
Cars.
Yeah, if he talks cars.
That's it.
You get a sense that maybe he's going stir crazy at home.
Stir crazy there,
Just a bit. Any excuse to get out the house.
So I think he's done with the second. If we have a third in the Miller family, it will be an oops situation, I think. So we'll have to see. But anyway, Lisa Mateo, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so check us out there. You can search Bloomberg Radio. A little bit of green on the screen. Not a whole lot happening here. We got some inflation data coming tomorrow and Friday. Then we've got some big bank earnings on Friday, which will kick us off, and that'll certainly be a catalyst for this market. So we'll stay on top of that. Right now, let's check in with Jess Menton. She covers all the markets for Bloomberg News. She writes about the markets often, and which we love to feature her reporting here on Bloomberg Radio. Jess Menton joins us here. Jess, what are you looking at?
I gotta say, it was good to see Matt Miller, though, right? Yes. I feel like maybe we'll see him more now as he tries to get out of the house with all the kids. But taking a look at the 10-year, so creeping back below 4%. So you are seeing what JT was talking about earlier. Obviously, the S&P 500 turning higher here. It's only about 0.6% away from that all-time high. So 47.96, 56 is the level that it needs to cross in order to close at a new all-time high that was last reached about a little over 2 years ago, though. If you look under the hood for the S&P 500, for the industry groups, consumer discretionary is the leader here, up close to 1%, though. If you look on the opposite in there, energy down about 1%. On the other side, obviously, that correlation that we've seen with oil prices. Some of these individual movers, though, Lennar, LEN is the ticker symbol on this, up about 3.5%, on pace for its best day since mid-December. So it did announce that it did increase its quarterly cash dividend to 50 cents per share, and then it also authorized a boost to the stock repurchasing program up to an additional $5 billion. And that's something that actually had a story in the terminal that went over the weekend on Sunday that I was taking a look at what the outlook for buybacks could potentially mean for this year. So when you're looking at the terminal, actually companies in the S&P 500 spent nearly $800 billion on buybacks in the past 12 months. So that's down about 20% from the same period a year earlier. But obviously we had those record buybacks in 2022, not surprisingly, because companies were sitting on so much cash because of what happened with the pandemic. So it's going to be interesting to see this earnings season in what banks particularly are going to say. Usually their 10Ks, though, get delayed, so we don't always get their buyback data whenever they do report, but it is important to hear what executives like Jamie Dimon and others and what it means for some of the stipulations when it comes to some of the controls from the Fed, what that could mean for those banks moving forward, Paul.
So, I mean, I'm looking at your article from 2 days ago about the buybacks here. So when rates are higher, they were just a little bit more reluctant to buy back?
Well, part of that was because it prevented companies from wanting to take on new debt. So for the last 5 quarters, buybacks have actually fallen, but that could potentially change a little bit in 2024. So the outlook for this year is that buybacks will increase once again, but it might not just be at those record levels that we would have seen in 2022. But it's the whole idea of the potential for there to be rate cuts. So then it would be easier for companies to take on that new debt in order to repurchase stock.
I mean, you've got this chart in your, and folks, if you go to the Bloomberg terminal, bloomberg.com, and look for Jess Menton's reporting here on the market. I mean, some of the companies that are buying back stock over the past 12 months, Apple, $77.6 billion.
And that's even a little bit lower than it had the prior year, but still of like quite a number there. And then you also look at what happened with Alphabet, Meta. So if you combine those three over the last 12 months, both of those, all three of those companies have spent more than $160 billion.
And the other, I mean, it's tech stocks are on there, but the other things that jump out at me are the energy company, ExxonMobil and Chevron, huge buybacks.
And they're expected to continue that growth. And so we'll hear from those two companies in the next couple of weeks. Obviously, we'll have JP Morgan as well as some of the other big banks like Citi and Wells Fargo on Friday. And then, of course, United Health and Delta also reporting on Friday.
You know, when I see the buybacks, I'm like, can't you build another refinery or something, or LNG or something like that? But I think they respond like, well, no, we really can't, because the regulatory environment is such that it's tough to build new infrastructure in this country. So we're just buying back stock, I guess.
And that was something last summer. A lot of companies were also putting more money into CapEx. So that's an optimistic sign when you do think about the economy and where things are headed, if companies are willing to reinvest in their business.
I see one of the companies I've covered for a long time, Comcast, also returning about $11 billion, because there's a business that throws off a ton of free cash flow. And yes, Comcast, the cable and broadband business, is a capital-intensive business, but they throw off a lot of cash. So good stuff. Jess Menton, thanks so much. We appreciate that. Jess Menton, she covers all the equities. She and the equities team, lots of good reporting every day on the equities markets, trends going on there. So check out their work on the Bloomberg terminal and on Bloomberg.com. All right, let's talk about Boeing here. This is really an issue. I mean, I love this company because to me, it's always seemed like a real symbol of American engineering, ingenuity, leadership. You think about the amazing facility they have out there in Seattle. When you're driving on the highway from the SeaTac Airport into Seattle, you just kind of pass it by. It's just mile after mile after mile of their facilities there, and jets all over the place. Just amazing. But boy, they've had some real challenges over the last really 3, 4, 5 years, and the latest being with this 737 MAX jet with a side blowing out. George Ferguson, he's a senior aerospace airline analyst for Bloomberg Intelligence. He follows this company very, very closely. George, what are we hearing from the company today about where they are in terms of, I guess, kind of getting these birds back in the air here, and maybe, kind of what their thinking is about what happened?
So I think we're still waiting to hear from the regulator, from the FAA, on an agreement on the inspection plan to get the airplanes back into the air. It's a fast-moving story, so I don't know that I may have missed something in the last couple of minutes, but I still don't think we've agreed on an inspection plan yet. And yesterday, what I think we heard was there was an all-hands meeting, where CEO Calhoun told the employees that they had to sort of own up to their mistakes, I guess was what he kind of said. So sounded a little bit contrite there, but I think that's the latest for us. The biggest issue is, will this spread past the 737 MAX 9? If it goes and you end up having to park the MAX 8 fleet, that would be a major issue. Right now, we don't see that happening. It looks like it's not going to interrupt deliveries, I think, for 2024 in the form it is right now. And that's what we're watching very closely too, right? Because if that impacts the potential for deliveries, we'll have to start to knock those down, and that changes cash flow, income, all those great items that we focus on in the markets.
Now, George, yesterday we heard from CEO Dave Calhoun. He was basically kind of fighting back tears. He was kind of owning up to the company's shortcomings. What was the reaction to that? What did people think about his reaction? And also, we haven't heard from the supplier much as well.
Yeah, I mean, I guess from the supplier put out a press release. I think it was Monday morning. Well, Spirit Air Systems, the supplier. We're not sure that it necessarily happened at Spirit Air Systems. They do make the fuselage. We do believe they put the plug in there, but Boeing may take the plug out to load the airplane. So, but they seem to be much slower in doing much of anything and letting Boeing take the lead. I think that's probably fair. It's Boeing's airplane. And then I think it was interesting to see, this whole issue. But I think at the end of the day, everybody's still trying to figure out where the problem is, how far it reaches, and what the travel impact is. So there wasn't a lot new in that. Just that it seemed like maybe he was indicating that it was going to be Boeing's fault or Boeing supplier's fault at the end.
So at the end of the day, George, Boeing's the name that's on the plane here. I mean, what's the feeling within the aerospace circles that you travel in, George? I mean, I know you go to all the air shows, you talk to all these buyers, the folks that lease these planes. Does Boeing have a real fundamental engineering / manufacturing problem, do you think?
I think that sense is in the aerospace circles that there is a fundamental problem. In this case, I would say it's not so much engineering, right? Engineering was really around the MCAS system. In this case, it's a fundamental manufacturing problem. But I mean, those are the two most important things they do every day, right? They engineer aircraft and then they build them and send them out into the fleet. But definitely, we've had a number of problems in the manufacturing process, either at suppliers like Spirit, or even up at Boeing. We had bolts loose on the back of rudders of aircraft that came out in the news over the holidays. It really feels like the stability isn't there in the build process, and it's something that Boeing really needs to get really its arms around quickly. I mean, I thought they would have felt this way mid-year last year, right? Everyone talking supply chain, you'd think they've been digging into Spirit Air Systems, digging into all their suppliers to make sure there's stability there. It's a very, very challenging process. There are lots of suppliers, there are lots of parts that get put together to make an airplane. But I think this just re-emphasizes the fact that they really have to dig into their supply chain and their suppliers and make sure they have stability in this manufacturing process if they want this recovery to continue in the company's deliveries.
So, George, we've been hearing about this every day. We're hearing some more information about it. What does all this bode for Boeing's earnings? I mean, how are they doing before, and how do you expect them to be?
Yeah, so we're not ready to take down the number of deliveries we think they can make in 2024 based on what we've seen so far. Again, I think if we saw the grounding stretch to the max 8, that would be very, very concerning. Then I think we'd start to think about, what the real potential was to get all those deliveries out the door. But right now, it does seem to be contained to this fleet of 215 airplanes. We've heard a couple instances where there were other loose bolts, but we haven't heard it's absolutely widespread. And the inspection that they need to do, the last we heard on it was a 4 to 8 hour inspection. That's not horrible. Something that ought to be able to be done in a couple months to get the rest of the fleet going. Again, if it stretches from that, everyone will have to take out their pencils again and think about what deliveries will be, and that's going to knock down cash flows, and that's going to knock down profitability at Boeing if we're going to knock it down.
George, is there concern here among investors and just observers that the federal government, Congress, from a regulatory perspective, might take a look at Boeing and put Boeing in its sights here?
I mean, Congress has done that once already.
Okay.
They are the national aerospace champion, and if something is amiss at Boeing, I think it does not bode well for America. So I would be surprised to see Congress dig in. They take a little bit of time. There's I think even some concern. The FAA has had its challenges. It's been short-staffed. It's had turnover issues, and they've been maybe a little more intense on some of these issues. I guess that's a good thing when it comes. It's definitely a good thing when it comes to safety. Right now they seem to be. I imagine the right way to put this is they'll take this as far as they think they need to do to preserve their reputation, which got muddied in MCAS, which may be even further given that history.
And George, yesterday, the chief safety officer, he was right alongside the CEO. Talk about a pressure position. I mean, his position was created after those 2 fatal crashes about 5 years ago. So what do you think, what's his thought process? What's going through his mind now?
I think the supply chain it's like an octopus, and that's got to be the hardest job inside Boeing, right? Or inside any company, especially Boeing. And I'm sure he's not getting a lot of sleep at night thinking about all the different things that can go wrong. It's like whack-a-mole, right? And my sense is that's what they've been doing. They've been finding problems, fixing them, and as they do that, they look to the right, and there's another one rising up that they've got to manage. It would be nice if they got some stability inside these workforces. I think the turnover is getting better. The longer you keep that better turnover, the longer folks are on the line, getting trained, doing the job, numbers of repetitions, the better it's going to get. But right now, it looks pretty rough, right? That's a really hard job.
All right, George, thanks so much for joining us. We always appreciate getting your insight here on all things aerospace, airlines. That's George Ferguson. He covers the aerospace and airlines industry for Bloomberg Intelligence, decades of experience there, so we appreciate that. I'm flying a 737-900 on Friday. We'll see. It still says kind of good to go. And
bring your crescent wrench with you.
Yeah, bring my crescent wrench with me on, just in case anybody needs a bolt tightened or anything like that. But I don't know. But if you're an airline, you got nowhere else to go. It's a duopoly in this global industry. Boeing and Airbus by and large.
And it's sad, but it puts that kind of thought in flyers' minds now. It's something else you have to think about.
Yeah, I don't have any concern, but but we'll see. But it's an issue for Boeing because again, this is not an isolated incident. As George was mentioning, we had that MCAS issue a couple of years ago, which is very serious and grounded a lot of planes for a long time. So this is something that Boeing needs to try to get ahead of sooner rather than later. So we'll see how that plays out. The stock's up a little bit today after being off about 11% year to date. This is Bloomberg. Let's get some company news right now with Denise Pellegrini.
All right, a little bit more on Boeing for you. We have the FAA saying every Boeing 737 MAX 9 with that plug door will remain grounded for now. Also, you remember Boeing moved its headquarters from Chicago to the D.C. area not too long ago. This, of course, to be more aligned with the government trends and maybe fend off some of the criticism you were saying that Boeing might get. We'll see. Amazon laying off hundreds of employees. This is in its Prime Video and studio businesses. Amazon Twitch live streaming service, meantime, cutting about 35% of its staff. Chips and AI in focus because TSMC halting a sales decline. That's after AI demand offset what you might call chip malaise. We get more on that from Bloomberg's Charlie Pellet.
Denise, fourth quarter revenue at the main chip maker for Apple beat estimates of a decline as demand from artificial intelligence players helped offset sluggish smartphone and laptop chip sales. While it outdid analyst expectations and its own guidance, Taiwan Semi's quarter still fell short of delivering growth. December sales were down 8.4% on the same month a year earlier, offering a mixed outlook for the year ahead. TSMC's most important customer, Apple, has faced headwinds with its latest iPhone generation, especially in the world's biggest mobile market of China. Charlie Pellet, Bloomberg Radio.
All right, thank you, Charlie. And Walmart using artificial intelligence to help people find what they need in those huge stores. This is a new generative AI tool, and it allows you to search for things by use case. For example, you can say, instead of saying repair your jewelry, you can just say, what do I need to fix everything?
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. Markets seeing some cautious trading ahead of the December inflation report. We get that tomorrow. That is expected to shed more direct light on when the Fed could dial back their interest rates. Some of the biggest U.S. banks, they're going to report fourth quarter results on Friday. Right now, the S&P 500 sits less than 30 points shy of its record of 47.96 that we touched a little over 2 years ago after rallying strongly in the last couple of months. In the S&P 500, right now you have 5 of the 11 major industry groups. They are higher right now. Communication services, the biggest gainer, and the biggest drag, that is coming from energy shares. We have NYMEX crude right now down about 0.3%, 72.03 a barrel. The 10-year yield, that's unchanged right now, 4%. S&P 500, 10 points higher. That's up 0.2%. 47.66 on the index. The Dow Jones Industrial Average up 56 points, and the Nasdaq 100 right now up 44 points. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Lisa and Paul.
All right, John Tucker, thank you so much. We appreciate that. Lisa Mateo, Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube, so you can head over to youtube.com and search Bloomberg Global Radio. Consumer Electronics Show, the CES out in Vegas. 130,000 tech geeks get together out in Vegas and look at all the new gadgets and stuff like that. I've actually done it many, many times. It's a lot of fun out there. But boy, there's crowded. You got to wait long lines to get a taxi.
Do you go for the tech or for Vegas?
Both. Let's be honest. You know, I go to the craps table at Bellagio, and they know exactly where to find me if you're looking for me. We got some smart people out there. Mark Douglas, the CEO of Mountain. We've talked to him a lot about the digital advertising space. He joins us here, along with Mark Penn, a president at Stagwell and a former chief strategy officer at Microsoft. Gentlemen, thanks so much for joining us from Vegas. Looks like a pretty staid place where you guys are, not typically where you would find me if we were doing a live remote. Guys, I know you guys kind of have a partnership that you recently announced. Talk to us about that.
Well, I can start. So what we're focused on is essentially performance marketing for some of the world's largest brands. We've talked about performance marketing a lot, but what you see happening is with the demise of Nielsen, brands essentially, want real metrics. They want real targeting. They're not happy with just spending hundreds of millions of dollars and having no real data and no real control over it. So both of us, Mark Penn, his company is kind of the premier performance marketing holding company for agencies. And obviously you guys know Mountain Bennett Performance TV. So we're teaming up with an offering geared directly at the world's largest brands to now enter the world of performance marketing.
Hey, Mark, talk to us about Stagwell, what you guys do there and how you guys can serve advertisers and the networks and really kind of help out with measurement there.
Sure. Stagwell and NASDAQ listed companies, we manage about $5 billion of media for our clients. And so this partnership is very important to extend, our performance-oriented media into connected TV, where Mountain has a real specialty. And also, we have a series of digital platform products in research, communications, and media, which Mountain can take to its primarily small business market. So we think this is a win-win partnership for digital marketers and for both of us in terms of the billions of dollars of media that we manage at Stagwell.
Well, I mean, that certainly seems like a solution here to a growing problem, because the growing problem is we now consume our media on so many different platforms, and it's almost impossible, I would think, to measure that accurately. And you talked, it's been a huge challenge for Nielsen. So what do the brands actually need, and what can you guys deliver? Because I got to make sure I'm reaching my audience here.
Well, brands need results, right? And so the real question is how much you invest and how much you kind of get back in return. Is it a 2-to-1, 3-to-1, 4-to-1, or you're just building your brand, right? And so What we have been has been a more performance oriented, and the primary measurement of that is going to be sales. We do have attribution tools. We do have location data. So we generally know if you've gone to the store or not gone to the store. But by and large, performance media has a set of KPIs which are really rigorous. That means that of the 2,000 ads that people see a day, we'll be able to track how yours do.
Now, Mark, you're making it easiest for us here. Same name. You guys are out in the middle of it. CES. Talk to us about some of the things that you're seeing there. What are some of the hot items that catch your eye?
I've been on the show floor. I mean, I honestly, the hot topic is AI, but AI is just becoming pervasive. It's like electricity 100 years ago. Everything will be electrically powered. Everything will be AI powered. So, you go to the big booths. Some of these booths are like the size of large homes. And you see, I know LG had transparent televisions. You kind of see the future when you come to CES. You don't see the product they're launching today. You see what they're going to launch 5 years from now. And there's a lot. I mean, the transparent televisions, I think, are really capturing everyone's attention. You just see through the TV and watch and watch television. That's the one that caught me.
Yeah, what are you going to do with that, Mark?
I know. I'm not sure. So I have to buy it at some point.
I think this year's. I'm going to the floor more intensively this afternoon, but really this year is a year too early. Next year, I think, is going to be amazing because next year people will have had the time to integrate AI with hardware.
Yeah.
And that's where I think you're going to see incredible advancement. I think here you see people talking AI, showing some AI, but they haven't really had time to build the consumer product that really incorporated it. Next year, I believe, will be spectacular.
Yeah, I would tend to agree with that. And I'll bring my transparent TV to witness all this AI.
3D.
So, hey, Mark Douglas, talk to us about just kind of when you're looking out at the Metas of the world, the Facebooks, the Googles, the Amazons. Give us a state of the advertising market out there in terms of linear versus digital, because we hear the linear television is just brutal, and it just seems like it's in a secular decline.
Yeah, I mean, I think that's true. One of the, but the number of people watching TV is not changing. And so it's the business models of these media companies that are having to evolve, but the viewers are there, the dollars are there. They're having to change how they acquire media. That actually, by the way, kind of fits right in on what Mark Penn and I are talking about in terms of the brands realize this. And they're like, okay, well, I'm not going to rely on linear data anymore. I want something holistic. I think NBC made a really interesting announcement. They announced this year their goal is 60% of all ads that they serve, NBC on Peacock, CNBC, like NBC Sports, they expect those to be now targeted in a digital way, in the way that like Stagwell and Mountain are focusing on. And that's a huge announcement. I mean, that's like, they're basically saying like they expect $20 billion of their ad spend to now be digitally targeted across linear TV and streaming TV. So that's a big announcement they made this week.
What is the competitive response from AC Nielsen Company, the traditional measurement company, the currency for that $100 billion TV business?
Yeah, people continue to seek the holy grail of complete measurement, which continues to be somewhat evasive in nature. But again, more of it is performance oriented. You look at the partnership that we have. The partnership is really designed to capture the expanding market in connected TV. That really what's happening is linear TV is becoming connected TV.
Yeah.
Those people who said they would never, ever do ads, like Netflix, they're doing ads.
Yeah.
Like Amazon, they're doing ads. So ads are back. All that time which people were spending without ads is coming back to advertised time. And that's good for us, good for companies like Stagwell.
Yeah, I think this year is the start of the TV. A lot of people don't realize the TV industry grows at 1% rate, while streaming has grown obviously much faster. I think this is kicking off the year where the whole industry starts growing again.
And we're going to have a big political season. Remember, there's going to be $12 billion on top of regular advertising here.
And does that still go to primarily local broadcast?
It is now more distributed across all platforms, but I would still say it's more, it used to be about 80% local broadcast. I think that'll come down more like 50, 60%, with the 40% going to as local as you can get your digital.
Yeah. All right, guys. All right, thanks so much for joining us, both of you guys. Mark Douglas, President and CEO of Mountain, and Mark Penn, President of Stagwell. They're out there at the CES, the Consumer Electronics Show, out in Las Vegas, as is seemingly everybody else in almost every any industry that has any kind of technology aspirations, one way or the other. They seem to find themselves out there, and it's a good time. I mean, it's fun. You should go out there.
I definitely need to.
Especially,
I've only been to Vegas once now.
A lot of people that, that just like to see the latest gadgets, the tech geeks, they go out and they walk the floor. Now, a lot of people will go out there, like myself, and never walk the floor because we have meetings set up in your hotel, and then you just kind of do meeting.
Yeah,
after
so you
meeting.
go in with a game plan?
Because everybody's there. You have a whole schedule, and the problem is getting around. So you kind of have to get a car because the lines are just crazy. But it gets pretty fun out there. So anyway, talking about CES in Vegas. Right now, let's head down to Washington, D.C. We'll get world and national news with Amy Mars.
All right, thank you, Paul. Yemen's Houthis launched their largest attack to date on ships in the Red Sea, forcing a response from U.S. and U.K. forces patrolling that waterway. Secretary of State Antony Blinken in Bahrain.
There'll be consequences for the Houthis' actions. We've also repeatedly tried to make clear to Iran, as other countries have as well, that the support that they're providing to the Houthis, including for these actions, needs to stop.
Secretary of State Blinken on his way now to Tel Aviv. Boeing CEO David Calhoun has pledged to find out why a door panel blew off a 737 MAX 9 jet last week during that Alaska Airlines flight. The FAA grounded about 170 MAX 9s for inspections after that happened. Calhoun, in an all-hands meeting, expressed sympathy for passengers on board.
All I could think about, I didn't know what happened to whoever was supposed to be in the seat next to that hole in the airplane. I got kids, I got grandkids, and so do you. This stuff matters.
Boeing CEO David Calhoun says they'll approach what went wrong with complete transparency every step of the way. Senate Republican leaders say there just is not enough time to resolve spending differences to avoid a partial government shutdown in 10 days. They're calling for a continuing resolution, but House Republican Matt Rosendale of Montana tells ABC his constituents are more concerned about other issues.
What they would prefer to see is us to reduce spending instead of piling this $34 trillion debt on top of the general public, and they would like to see us secure the southern border so that we know that our country isn't being invaded by folks that want to do us harm.
Now, in the Senate, Republican John Thune says they'll need a stopgap measure to last until March. Minority Leader Mitch McConnell, also in the Senate, acknowledged there just wasn't enough time to resolve the spending differences, and now we're getting word that House Speaker Johnson is expected to speak with President Biden about this today. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, green on the screen. Tomorrow's U.S. CPI number looks as the big macro event this week. Ahead of that, traders in something of a holding pattern. There are some other notable developments slated for today that could get pulses racing. The SEC ruling on Bitcoin exchange-traded funds. That's expected today. Could generate interest in crypto markets, particularly after yesterday's head fake. Madison Fowler at JP Morgan Chase, meantime, remains positive on U.S. stocks.
We are in a bit of a sweet spot when it comes to equity markets now, where you're looking at moderating inflation, really the nascent stages of earnings growth. Yes, we've seen some downward revisions. That tends to happen in your typical year, but we are constructive into the year ahead. And then I think you also, when you factor in the Fed easing, we do think that is an optimistic backdrop to be an investor.
Yeah, right now the S&P 500 9 points higher. That's up 0.2%, 4765 on the index. Dow Jones Industrial Average up 43 points, and the Nasdaq 100 up 45 points. That's a rise right now, 0.3%. While JP Morgan expected to kick off earnings season on Friday, revenue growth sevenfold the average pace of its peers. It may well prove to be the exception to a pretty tough backdrop for most of the U.S. lenders. Again, earnings season kicking off with the financials on Friday. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Lisa and Paul.
There you go, John Tucker. Thank you so much. We appreciate that. Lisa Matteo's with me. Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube. Looking at Bitcoin, 45,400, pretty much unchanged on the day. I think today's the day where the SEC is going to give us a thumbs up or a thumbs down on the spot Bitcoin ETF, which people have been, particularly in the crypto space, are really, really waiting for, because that would be a real seal of credibility here in the U.S. trading, at least. Our next guest is all over this stuff. Greg Taylor, he's the CIO of Purpose Investments. Who's Purpose Investments? Well, Purpose Investments launched Purpose Bitcoin ETF, the first direct custody Bitcoin ETF in the world in 2021, and they've been managing it ever since, so he knows what's happening here. Hey, Greg, we all got a head fake yesterday. First of all, thanks for joining us, Greg. We all got a head fake yesterday with, Twitter, X, whatever it is, putting out a tweet that maybe they did get the approval, then apparently was not. What do you expect to happen today with the SEC?
Yeah, I think the excitement yesterday was kind of on brand for crypto. Probably didn't surprise anyone too much, but I think this is a space, and at the end of the day, it does feel like the SEC has run out of reasons not to do this ETF. So it does feel like today was the day we're going to get the approval. It seems like a long time coming. Canada approved the ETF almost 3 years ago, and I think we've had a pretty good track record all the way through. So it feels like today is the day we'll get the announcement that the SEC has made the approval, and I think that's a good stamp of credibility for the entire space.
Now, Greg, take us through this approval process. I mean, there's a lot of moving parts for that. Can you walk us through it?
Well, I think the big thing I can speak to is the way the Canadian regulators did. And they were really trying to make sure that we had a good, safe ecosystem. And really, when we initially launched or applied for a crypto ETF back in 2016, the OSC, the Ontario Securities Commission, declined that at that point in time, because they thought the space was really not up and ready for it to happen. A lot has happened since then, and I think the exchanges have gotten better. The whole ecosystem's gotten stronger. And when we got our green light to go in February 2021, it was all about working with the regulators to show that this is something that you can invest in, that it's going to be a lot safer for the average investor to get access to this through an ETF versus just buying through a crypto exchange. And I think that proved out in 2022, when we saw a number of exchanges fail and a lot of people lost money and had a bad experience in the whole crypto ecosystem. But those that had exposure through a regulated ETF on a good regulated exchange were able to just deal with the price volatility instead of the whole financial system collapse.
So, Greg, you guys, again, you're the ones with the experience in this with your Purpose Bitcoin ETF. Talk to us about your ETF, kind of how has it evolved in terms of assets and just kind of how it trades, and give us some sense of how that's been.
Yeah, so we've been pretty happy with the whole trading assets through it. It's again, we're getting close to 3 years. We pretty much traded at NAV the entire time. We pretty much traded also with a 1 penny bid-ask spread. So keeping very much institutional style investments. And I think that's why it's gotten a lot of credibility and a lot of attention from both retail and institutions throughout Canada and the rest of the world that are using our product as a good way to get access to this. We've been trading on average around $15 to $20 million a day, but we've also had big days where we've had inflows and outflows around 100 million. And I think the big credibility to the system that we've designed and done this is that we've not lost a single coin through this. We've also not really impacted the market or impacted the way our NAV is traded. So I think it's all about making sure that your processes are up and running. And I think it's also dealing really with credible counterparties. That's the most important thing we've been focusing on, is dealing with strong custodians, strong trading partners, and not really going for just something that's easy, because this is a volatile sector. And I think you really want to make sure that people are going to get access to it and not have to worry about any of the underlying volatility.
Yeah, I want you to expand on that a bit, Greg. So we talked about the crypto landscape in itself. I mean, it seemed like it had a pretty good run in 2023. Where do you see it going heading into 2024?
Well, that's the big question. And I think one of the things that people are really looking for is this US ETF to come, because really it's tough to value Bitcoin. I think everyone's trying to come up with models and trying to come up with a way to look at this versus physical gold or something else. But at the end of the day, it comes down to supply and demand. And demand, we know, it is really fixed. So it's kind of looking at, supply is really fixed. So when you look at demand, bringing in new investors in a US ETF is really opening this up to a whole new market. And I think when you get that more demand coming back into this, and people are looking for alternative currencies, and if people are losing interest in US dollar or some other fiat currencies, having a sleeve of their assets in something like crypto could bring in more investors. So I think that could be positive for the entire ecosystem, and in particular and for Bitcoin. The next big thing throughout the year is the halving, which is going to come out probably in Q2 of this year, which is really going to be something that takes down the incentive for Bitcoin miners again. So that will again limit supply. So we could be setting up for 2024 that if we do have a risk on environment, you've got more people looking for access to crypto and also less supply out there. So could be setting up for a bullish year, but as we know, this is a volatile asset class, and anything can happen.
Greg, what do you expect to happen when we get the big heavyweight brands like, Vanguard and BlackRock and Cathie Wood's ARK? When you get the big names coming in this ETF space, how do you think it's going to play out over the coming weeks and months?
Well, at the end of the day, it is going to open it up to a whole new sleeve of investors. Our products have been up and running for almost 2 years, but really at the end of the day, or almost 3 years, but at the end of the day, you really want to get more US retail investors involved in this. And that's something that I think this will only help. So that should bring in more buyers to the space, and that again should add more credibility to the space. I think the SEC finally getting around and more comfortable with the ecosystem again will be a stamp of approval for the whole space. So this is a positive development, and I think should, at the end of the day, lead to further advancements. Maybe the next thing we'll see is an Ethereum ETF coming down the road, and I think that would be good for the space as well.
Anyway, so does an approval from the SEC, does that basically mean that it's a yes for everyone else? I mean, what does that mean if they say yes to, let's say, one application?
Well, I have a hard time seeing how they'd approve one and not the others, because everyone is basically using the same format, which is, again, very similar to where we have with similar custodians with the Gemini and Coinbase and similar trading partners and has similar structures. So I think at the end of the day, they will approve all of them versus just one-offs. And then it's going to be, as we're seeing a competition, see who's going to be the one that gets the market share. We were fortunate to be the first in Canada, and that was a good advantage to go. But you really, at the end of the day, then have to deliver. There's one thing being first to market, but if you have investors a bad experience, then that's something where you can lose a lot of credibility and really be a mark on the whole ecosystem. So I think what we are hoping for is that this is going to be a good experience, that there aren't going to be any problems in the first day of trading, and that would be, at the end of the day, positive for the space.
Hey, Greg Taylor, thanks so much for joining us. Really appreciate it. Greg Taylor, he's the CIO of Purpose Investments. So the good folks up in Canada, they came out with the world's first direct custody Bitcoin ETF. They did that in 2021. So Canadians ahead of the U.S. market here by almost 3 years. The expectation here, of course, is today. And Eric Balchunas from Bloomberg Intelligence said he thought it might be this evening between 5 and 6 p.m. We will get a ruling from the Securities and Exchange Commission either approving or not approving these spot Bitcoin ETFs, and of course, Bloomberg Radio, TV. We will be all over that because we do crypto. This is Bloomberg. Let's get some company news right now with Denise Pellegrini.
All right, thank you, Paul. We have the drama at Boeing intensifying. The FAA now says those 737 MAX 9s do remain grounded until everyone is sure that they are completely safe. And George Ferguson, senior aerospace and airline analyst with Bloomberg Intelligence, says the big issue to watch is if the problem of the door plug coming out mid-flight spreads to other models.
If it goes and we end up having to park the MAX 8 fleet, that would be a major issue. Right now, we don't see that happening. It looks like it's not going to interrupt deliveries, I think, for 2024 in the form it is right now, and that's what we're watching very closely.
And Ferguson with us here on Bloomberg Markets with Paul Sweeney and Lisa Mateo. Boeing shares higher right now. Electric vehicles in the headlights. And Arno Anslis, CFO at Volkswagen, says the shift to EVs isn't easy, and having its own in-house battery supply is key there.
We are convinced that having our own battery supply in the company is very important. And it has really three pillars. One, a unified cell, then our own production, and we secure our raw materials.
And Anslis with us there in a live special simulcast on Bloomberg Radio and Television. Job cuts over at Amazon. Amazon laying off hundreds of employees. This is in its Prime Video and studio businesses. Amazon shares are higher right now. And forget about mixed martial arts. Mark Zuckerberg getting into livestock farming. Meta's CEO, raising cattle, says he'll feed them macadamia meal and give them beer to drink. He posted all about it on Instagram from his estate in Hawaii, where he will raise them. Why beer? Well, he raises Wagyu, that's type that comes from that high quality beef. And those are some of the company stories we're following.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, looking at these markets here, just a little bit of green on the screen here. The S&P and the Dow up about 1/10%. The Nasdaq up about 0.3%. Yields also pretty steady. The 10-year Treasury is at 4.01%. WTI was higher, was at 73 and change. We're about $72.30 here, pretty flat on the day for WTI crude oil. And Bitcoin also unchanged here, 45,400, again, ahead of that expected SEC ruling later this afternoon. So we'll stay on top of that. Right now, let's sit down to Washington, D.C. World and National News with Amy Mars.
All right, thank you, Paul. Ron DeSantis and Nikki Haley will be the only two candidates on the GOP debate stage in Iowa tonight. Leading candidate Donald Trump will be skipping tonight's debate. He'll instead hold a town hall in Des Moines. The Biden administration ordered all cabinet members and secretaries to notify the White House Chief of Staff's office if they are unable to perform their duties. This after the Pentagon waited days to inform President Biden and top officials that Defense Secretary was in the hospital and had transferred power to his deputy. Bloomberg's Anne-Marie Hordern has more.
What we've seen from the fall of Kabul on was that they struggle with interagency. They are very insular within the White House. When you have individuals who should be the transportation highway of information flowing into the White House and out of the White House, it does seem like that's where things seem to break down.
Bloomberg's Anne-Marie Hordern reporting. Defense Secretary Lloyd Austin had prostate cancer surgery on December 22nd and was readmitted to the hospital New Year's Day because of complications. From live streaming to livestock, a big tech CEO with a new passion. Bloomberg's Steve Rappaport fills us in.
Mark Zuckerberg is now a cattle man, raising cows on his ranch in Hawaii. The Meta platform CEO says the animals will feed on macadamia meal and wash it down with beer, both homegrown on his estate. Zuckerberg announced his farming ambitions in an Instagram post alongside a photo of him dining on steak. The billionaire businessman writing his goal is to create some of the highest quality beef in a process that will be local and vertically integrated. Zuckerberg added, of all his projects, this is the most delicious. Steve Rappaport, Bloomberg Radio.
In Ecuador, a live mid-afternoon newscast was underway when masked gunmen burst into the studio and unleashed at least 15 minutes of threats and fear. It happened after the apparent escapes from prison of two leaders of Ecuador's most powerful gangs. Authorities say all the intruders have been arrested. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and Lisa.
All right, Lisa. The great Humpy Wheeler once told me. Now, Humpy Wheeler is probably the greatest promoter of NASCAR races ever. So he ran the Charlotte Motor Speedway. He gets 150,000 people in there. He said the key to running those big monster events are the 3 T's: tickets, traffic, and toilets. And we got a story for you that goes to the last T. Eton College. We're talking, over in England. Eton College has delayed the start of its school term, telling parents that the toilets in its boarding houses are backing up due to sewage problems following recent floods. Pupils were due to return on Tuesday evening and start lessons on Wednesday. Eton will be running remote lessons instead. Eton, near Windsor, is one of the most prestigious schools in Britain, with fees of about £50,000 a year per pupil. Its alumni include Princesses William and Harry, as well as former Prime Minister Boris Johnson and current Foreign Secretary David Cameron. Thames Water updates its website with a notice on January 8th that the heavy rainfall of recent weeks and a high water table have put huge pressure on our sewers and pumping stations. How about
doesn't
that?
it rain a lot in England anyway? Aren't they used to this kind of thing?
Exactly.
I don't understand.
I don't know. It's crazy, but that story kind of jumped out at me. So Thames has been at the center of a crisis engulfing the industry as calls from the public and politicians to stop releasing sewage into waterways coincided with the soaring debt cost. Parts of England experienced some of the worst flooding in years last week, with hundreds of flood warnings, including for the Severn and Thames River. So there you go.
What would Prince William and Harry say?
Yeah,
if
exactly.
They were there and this happened.
Exactly. So yeah, we got it all here, folks, for you. So we keeping you updated on our good friends at Eton College over in England. S&P 500 up 0.2% here. NASDAQ giving us a little bit more performance here, up about 1/3%. And WTI crude oil flat, $72.23. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to get the latest on the whole crypto thing. We've got one of the experts on the street, James Seifert. He's the ETF analyst at Bloomberg Intelligence. He's going to join us in studio. He's got a packed schedule. We feel pretty good. We got some time from him. Figure out what's happening with this ETF thing, this Bitcoin. I don't know what's going on over there, but we'll figure it out. Woo Jin Ho's going to join us. He's the senior hardware analyst at Bloomberg Intelligence. He's at CES out in Vegas. God knows where he is, but we're going to talk about that HPE Juniper deal. We might even talk to somebody at HPE, so we'll keep an eye on that. So that's all coming up in this hour. First, let's kick things off with Mr. Charlie Pellet.
I thank you very much, Paul Sweeney. And right now we do have HPE and Juniper both trading higher. HPE up now by 1.2%. Juniper up by 1.8%. You mentioned Bitcoin. Right now we've got Bitcoin lower by 0.3%. 45,301 right now on Bitcoin. The Dow, the S&P, NASDAQ, they're all advancing. Throw in the NASDAQ 100 index as well. And yes, the Russell 2000 actually lower. Down 4 points right now, drop there for the Russell 2000 index of small cap shares, down by about 0.3%. S&P up 2 points, little change, up by about 0.1%. Dow up 21, now up 0.1%. NASDAQ higher by 0.3%. 10-year yield 4.01% with a 2-year right now 4.34%. Spot gold down $3.50 the ounce to $2,026, drop there of 0.2%. And West Texas Intermediate crude flat on the day, down 1 cent, 72.25 a barrel on WTI. Well, Wall Street certainly looking ahead to tomorrow morning's report on consumer prices, what is ahead for the inflation outlook and the stock market. Neil Grossman is the former chief investment officer at TKNG Capital, and he was a guest this morning on Bloomberg Markets.
If we are going to be in a benign inflation environment, the government manages to stay out of the way of causing problems, I suspect that you're going to continue to see the broader echelon of stocks do better. Certainly the risk-adjusted returns are probably going to be a lot better.
And you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. Boeing CEO Dave Calhoun has told employees the plane maker must own up to its shortcomings, underscoring the stakes of a safety incident that is renewing questions over the quality of its manufacturing. We've got Boeing up now by 1.8%. Again, recapping, stocks higher, S&P up 7, up 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Lisa Mateo, Paul Sweeney, we're live here in our Bloomberg Interactive Brokers studio, and we're also streaming on that YouTube thing, so go check out youtube.com and search Bloomberg Radio. James Seifert joins us. Bloomberg Intelligence. He's our ETF guy. Yes, we have ETF team that follows this whole scam that these guys tell me is an asset class. But James, I'm just shocked. I mean, you and Balchunas are in the sweet spot. You guys have a career just mapped out for you because ETF has just been extraordinary, the fund flows over the last decade. I mean, you can't get out of the way of it, can you?
Yeah, I mean, it's an $8 trillion market right now. There's $8 trillion in U.S. ETFs right now.
Yeah.
Over $10 trillion if you go to the global market. So
just amazing. All right, so you guys are in the sweet spot. Good for you. Tell us about this Bitcoin ETF. I thought we had one yesterday, but what's happening here, and what do you expect today?
Yeah, you and I both thought we had one yesterday. I was actually like coming on radio, and I was on radio live when Gary said that it was actually the account had been hacked. So I didn't even know how to react. But when it first came out, I was like, "This is strange." They usually don't announce things via their Twitter, but it was the official SEC Twitter, and I made sure of that before I retweeted it and shared it with other people. That said, we were never expecting an approval yesterday. We have largely been expecting the approvals to come after market close today. We've seen some action in the last 30 minutes. We saw a bunch of these filers request for acceleration all this means is they're requesting to list tomorrow. So it's not a done deal yet, but it's as close to a done deal as we could possibly get.
Yeah, talk about some of that action. I mean, how much did it go up? How much did it drop down then after they found out it was false?
Yeah, ironically, the tweet and the approval didn't really send it flying that much higher. But it went up $1,200 or so, and then it went down below where it was trading right before the announcement, actually. So I guess that kind of shows maybe this was a little bit priced in, or maybe more people were skeptical, even more skeptical than I was, and didn't really buy into it. But that said, it's been pretty volatile the last couple of days. A lot of the stuff related to crypto has been down today. That we're still expecting approvals after market today, and we think they're going to trade tomorrow.
So how is this going to unfold? So let's just assume we do get the approval today. Probably after the close sometime. What happens tomorrow and over the next several days and weeks, do you think?
Yeah, I'm excited. We've never had a situation like this. You've talked about ETFs are growing. We've never had a situation to study the ETF market and see what do 11 ETFs come into market that are very not differentiated that well. It's very hard to differentiate when all you're doing is holding one asset class, right? So it's going to be fascinating to see how this is. It's going to be like a study in Darwinism, essentially.
For marketing.
What we're going to be watching is for who's going to get the most volume on day one and day two. Grayscale obviously has a lead there because of the assets and the volume they are already coming over with. But also where are flows going to go? I expect Grayscale to see a significant number of outflows. How much of those flows are going to go into these other ETFs? Also, you can't discount some of these big players, Fidelity, BlackRock, and I know for a fact some of the other players, the newer players coming in, Bitwise, Valkyrie, they have money lined up on the sidelines ready to come in. We have good sources saying that there's significant amounts of capital that are going to come in. The question is, are these hundreds of millions, billions of dollars going to come in day one or day two? Is that new money to Bitcoin, or is that money that's shifting from something like a Bitcoin ETF in Canada or another version of Bitcoin type exposure? So there's no way to know how much this is net new buying versus shifting of capital, but we're expecting serious numbers to come out over the next 2 days into these ETFs.
Now, when you mentioned that, were you referring to them slashing those Bitcoin ETF fees? Is that what you were talking about? Or is that a different ballgame, too?
Yeah, no, that is the number one way that they're trying to differentiate themselves as far as we're concerned. I think we have 6 or 7 of these guys that are waiving fees completely to 0%. BlackRock is waiving their fees down to 0.12 for 6 months or $5 billion. So everyone is basically just trying to jockey here. We're calling it the Cointucky Derby because this is and jockeying is the best way to look at this. Like everyone is doing everything they can. There's commercials coming out. People are cutting fees. A couple of people lowered fees to 25 basis points, and now we're seeing it even drop lower. This morning, ARK went down to 20 basis points for the long-term fee. BlackRock cut their fee as well. And everyone's doing fee waivers. There was only a couple of people doing fee waivers as of last week, and now there's 7 or 8 of them. So everyone's just trying to jockey for position and make sure they aren't too far behind somebody else. Because, right, if you have a relationship with somebody and they're saying, we're going to put money into your ETF, if you're charging double the price of another product, and I'm an advisor or I'm somebody that's working with you, I'm like, I can't in good conscience put my money into your fund when something charges less than half of what this is. But if it's 5 basis points or 10 basis points or something, maybe that conversation is very different. So that's how I'm expecting it to play out.
All right, very good. James, thanks so much for giving us a couple minutes of your time. I know you're super, super busy. This is a big day for the ETF space, big day for the crypto space. How much money is in ETFs these days?
$8 trillion in the U.S. market.
Unbelievable. And it's you and Balchunas covering it for Bloomberg Intelligence. So we're fortunate to have your research. James Seifert covers all the ETF stuff for Bloomberg Intelligence. Right now, let's get back out to Vegas. The high rollers table at the Bellagio. Woo Jin Ho, he covers all the technology stuff for Bloomberg Intelligence. Wooj, first question. What hotel are you staying at?
I'm at the Alara.
Which one?
The Hilton Alara. Across the strip.
All right.
Keeps me out of trouble.
All right. I'm a Bellagio guy myself, but anyway, good stuff. Wooj, talk to us about this deal that we see with HPE and this other. I mean, does this make sense for the sector? Because I know there's a lot of uncertainty out there just about kind of what this deal means for the companies here.
Sure. So for HPE, they've been looking to diversify their core computing business for quite some time now. One of the things that they've done several years back, they made the Aruba acquisition, slow start, but that's one of the more profitable businesses for HPE. In making this acquisition with Juniper, they've actually doubled down on networking. The networking business is as large as their compute business. And the hope over the long term is to drive better margin expansion going forward.
What do you think about the price here? Is this and I guess the bigger issue is this a good use of cash, good use of capital?
That's a really good question, and I think that's one of the reasons why investors were not too happy, reflected by the share price, right? I think there was an expectation of some money coming due from the H3C divestiture, roughly about $3 billion, coming back into better capital returns. Now that being said, the question is that with that $14 billion used for Juniper, will that drive multiple expansion? Let me give you a case in point. If you think about traditional Dell, HP, and HPE, they trade roughly around 8 to 9 times forward earnings. The networking guys on average trade roughly about 15 times forward earnings, 15, 16 times. If it goes back, if we start reverting to the mean to the two multiples, you could probably get about a 30% valuation bump if this deal works out for HPE's favor.
We're going to see about that. Hey, Wooj, hang on, because we're going to talk to the principals here in this transaction. That's Woo Jin Ho, covers all the tech stuff for Bloomberg Intelligence, because we're going to go back out to Vegas, stay in Vegas, if you will, because we've got the CEO of Hewlett-Packard, Antonio Neri. He's going to sit down with Ed Ludlow and Caroline Hyde and talk about this transaction. Again, HPE acquiring Juniper here. And it's, as Woo Jin Ho just said, the Bloomberg Intelligence analyst, there's a lot of strategic rationale for this transaction. But again, as Woo was mentioning, there's a lot of folks out there that are saying, gee, is this the right transaction? Is this the right use of capital for this company at this time? But now, let's go head out to this interview with Hewlett-Packard CEO Antonio Neri. He's with Ed Ludlow and Caroline Hyde in Las Vegas.
Welcome to our Bloomberg television and radio audiences to Bloomberg Technology. On Tuesday, HPE, it announced it has agreed to buy Juniper Networks for $14 billion in a move that will expand its presence in networking in particular. But there is also some skepticism being raised by Wall Street, as we saw with the price action. HPE CEO Antonio Neri joins us now to talk us through the reasoning. What attracted you to Juniper Networks? Why focus in data centers expansion? Yes. Networking, cloud networking presence expansion? Yes. Any worry about overlap here, Antonio?
Well, good afternoon, Carol, and thanks for having me. Yesterday was an exciting day for HPE, our shareholders, our customers, and our employees. We are reshaping the entire networking industry by combining two amazing companies with amazing complementary assets to capture the inflection point we see today, particularly with the AI. So we believe this is going to turbocharge the strategy that I have put in place 5 years ago, and we have been executing with discipline, and then ultimately give us the relevancy in this massive inflection point. And Juniper brings to us the complementary capabilities we didn't have across the networking portfolio. But think about it this way. We are actually creating a new core business for Hewlett-Packard Enterprise, which will represent more than a third of the company revenues, and most importantly, almost 60% of the company profit. And we will address a market that's growing, which represents approximately $180 billion. And this acquisition, this proposed acquisition, is going to be accretive post-close day one. So it's an exciting time for everyone. I think the market needs to understand it, but they will realize that we're going to challenge the 20 years incumbency with modern architectures and drive better solutions for our customers.
Let's talk about those solutions. Let's talk about that modern focus, because Cisco basically is the gorilla in the room that we're talking about. And Juniper Networks isn't a new asset. It's an older one that has failed to gain that market share from some of these competitors in the switching and the networking space. Why with you will it be different?
Yeah, well, I think we need to understand their business a little bit more in depth, right? So obviously, when you think about the internet era, Juniper today powers a lot of the internet connectivity. And so that's an enormous foundation. When we think about the enterprise business, they have done a fantastic job driving what I call the AI-driven disruption. Obviously, they have a powerful platform with Mist. We have an amazing platform with HPE Aruba Networking. Both are complementary because we have the scale, the reach, both from a technology and go-to-market perspective. But also they have been innovating what I call the next generation of AI-driven secure networking. So we're going to bring both together and deliver a better solution for customers. On the other side, we need to understand that also bring an amazing silicon ASIC capabilities for high-performance networking. We already in HPE have been focused on AI, interconnect fabric. This will turbocharge our strategy because we are the market leader in supercomputing. And when you talk about AI and talk about large language model, you talk about foundation models, whether it's weather or whether it's other type of applications, you need high performance silicon. And the core foundation of that is the network. We're going to create that network solution. We are going to add the data layer on top of that, and we're going to deliver this secure, unified experience to our amazing platform called HP GreenLake.
Sticking with the ultimate technology and the profitability of it, Antonio, the margin difference that we see within the networking businesses, Juniper's is lower than yours. How do you bring that up? Is that about ensuring that you're within the AI sphere, you're being able to charge more for what you're providing?
Actually, Karen, you have to look at two levels of margin. You have to look at the gross margin level, and they have super high gross margin level because of the entire ownership of the stack from silicon to infrastructure to software, similar to what we do in campus and branch. But we're going to bring to them the efficiency in order to drive the operating margin leverage by reducing cost around the ability to go and execute. So we believe the first step is the cost synergies. That's why the synergy cost more than pay off for the capital that we are taking to pay for this transaction. And then on top of that, you're going to have the revenue synergies, a higher gross margin, that ultimately through the scale of our reach will drive better operating margins for our shareholders. And that will translate into free cash flow because remember, this transaction is accretive day one for both a non-GAAP EPS and free cash flow basis.
We want to remind our Bloomberg TV and radio audiences we are sat down with the HPE CEO, Antonio Neri, and you're talking about that cost discipline. Where do the costs come out? Is it people? Is it jobs?
The cost actually is many things, to be fair. I mean, the biggest part will be in the G&A side. You know, HPE and my team had that tremendous track record in driving operating leverage across the company. When I became CEO of HPE, our non-GAAP earnings per share was 96 cents. We exit 2023 to more than $2.12. And a lot of that was gross margin expansion to pivot the portfolio, which this transaction turbocharges, right? We can talk about gross margin, higher growth areas, and then reducing the cost to run the business through automation and efficiencies. So that G&A portion will be a huge booster to the Juniper operating margin. And remember also, we're going to give them access to capabilities they couldn't deliver themselves in terms of as a service model, cloud scale. And last but not least, the go-to-market. HPE has a crown jewel, which is the go-to-market reach everywhere in the world, 172 countries, a scale they couldn't imagine themselves.
Antonio, we've got but a minute left. $14 billion in cash is a lot of money. What about the buybacks? What about the dividends? What about how else you're able to pay back when you've got a heavier debt load?
Well, first of all, this transaction is $13.6 billion. I know people like to run things up, but we are committed, number one, to maintain our credit rating, which is very important to us. And we believe that's absolutely doable. Number two, we are maintaining the share buyback commitment we gave at the security analyst meeting in October, and the dividends, which is a core component of our return, capital return to shareholders. And then over the next 2 years post-closing, we're going to return to 2 times leverage on our EBITDA and pay down the debt. And one component of that paying down the debt is obviously the proceeds from our H3C divestiture in China, which is proceeding very well. And obviously the synergies that we're going to drive through the free cash flow generation on both the Juniper side and obviously on the HP side. So that's why when I think about the shareholders, this is a no-brainer in many ways because it's the best use of cash to drive long-term sustainable profitable growth and expansion of earnings per share and free cash flow, which will actually result in a better return of capital to shareholder over time.
Antonio Neri, great to have some time with you, the HPE CEO. This is Bloomberg.
All right, that was Bloomberg's Caroline Hyde interviewing Hewlett-Packard CEO Antonio Neri on the acquisition they just announced of Juniper Networks for $14 billion. We're going to go back to our good friend Woo Jin Ho. He's a senior hardware analyst at Bloomberg Intelligence. He's out in Vegas at the CES conference. Woo Jin, what was the most important thing you took away from Mr. Neri's comments there about this transaction?
Yeah, there were a couple of things. One, in terms of return on invested capital and trying to bring back long-term shareholder gains from the size of the deal. I think that's where we ended our conversation. That was fairly interesting to me to quickly bring down the leverage, and then you'll get that back in terms of better earnings growth over the life of the post-deal. And the other thing is revenue synergies. And I've been actually getting a lot of Bloomberg client call-ins in terms of revenue dis-synergies because of because of the overlap of businesses between the HPE networking business and the Juniper networking business. So I'm very interested to see on how that really plays out because I really don't think that they're going to make the share gains versus Cisco, because when you have a large acquisition, it's never clean, to say the least.
Yeah, what does this mean for Cisco's take of the market?
Well, a couple of things that's been going on with Cisco. They have been slipping some share from a lot of smaller players. Juniper has been taking share away from them. But at the end of the day, Cisco has been pivoting over to more software to grow their business over the long term. If you recall, a couple of months back, they made the acquisition announcement of Splunk. So you're going to start seeing more software, infrastructure software in their portfolio. So they're trying to pivot away from hardware, whereas HPE is actually pivoting into to hardware.
Wait, Wooj, is that the sphere behind you?
Yeah.
That is very cool.
That is the sphere.
That is very cool.
That's why I picked this hotel. That's why I picked this hotel.
Very good. I mean, I got to get out there because it looks really awesome out there. So anyway, all right, Woo Jin Ho, thanks for taking some time out there. I'll let you get back to the conference floor there, the convention floor. Woo Jin Ho, senior hardware analyst for Bloomberg Intelligence. He's out at the CEO down at the CES conference out in Las Vegas, giving some comments on the HPE Juniper deal after we heard from the CEO of HPE. So that's some good stuff right there. Let's get world and let's get check with Charlie Pella right now. We'll just get an update on what's happening in the world.
I got you covered. Here's what's going on. Paul Sweeney, the Dow, the S&P, NASDAQ, all advancing. HPE up now by 1%. We've got Juniper, company being acquired. It is up now by 1.8%. Stocks, bonds, and the dollar seeing small moves. Investors awaiting tomorrow morning's inflation data for clues about the Federal Reserve outlook. Now that number, the CPI report, breaks 8:30 a.m. Wall Street time. We will have that for you live and complete coverage here on Bloomberg Radio. S&P right now up 11, gain there of 0.2%. We have got the Dow up 52, gain there of 0.1%. NASDAQ up 60. That is an advance right now of 0.4%. 10-year right around 4%, 4.01%. The 2-year 4.35%. Gold down $3 the ounce to 2026, drop there of 0.2%. While West Texas Intermediate crude is down 0.7%, 71.41 a barrel. HPE makes it official. It is buying Juniper Networks for $14 billion. Antonio Neri is president and CEO of HPE, and he spoke moments ago about the acquisition right here on Bloomberg Markets.
This acquisition, this proposed acquisition, is going to be accretive post-close day one. So it's an exciting time for everyone. I think the market needs to understand it, but they will realize that we're going to challenge the 20 years incumbency with modern architectures and drive better solutions for our customers.
And again, HPE up now by 1.1%. We do have Juniper trading higher by 1.9%. Amazon laying off hundreds of employees in its Prime Video and Studios business. Also today, Amazon, its live streaming site Twitch, said it was cutting about 35% of its staff, roughly 500 workers. Amazon shares up now by 1.5%. Again, recapping, stocks higher, S&P up 10, gain there of 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pella, thank you so much. We appreciate that. Lisa Mateo and Paul Sweeney, we're here with you live in the Bloomberg Interactive Broker Studio. We're also streaming live on YouTube, so you can head over to youtube.com and search Bloomberg Radio. Let's get a just kind of lay of the land of what we're going to be doing with this market here, because we've got some economic data coming out tomorrow, financial data, CPI tomorrow, PPI on Friday. So those inflation figures going to be right key for this Federal Reserve as they think about what to do with rates here. And that obviously is going to have a big impact on this market. Young-Yu Ma joins us. Young-Yu Ma is CIO, BMO Wealth Management. Young-Yu, thanks so much for joining us here. What do you think the Federal Reserve is going to do in 2024? I mean, that's for a lot of folks, that's kind of the big issue here for markets. What's your thought?
It is a big issue. It's great to be here. Thanks for having me. And definitely what the Fed is going to do this year is top of mind. I don't think the Fed is going to meet the market's expectations that seem to be priced in now of 5 or 6 rate cuts. The Fed is already starting to push back on that a little bit, but as long as the economy stays stable, the markets stay relatively stable, I don't think the Fed is going to be in a rush to cut rates or cut rates as aggressively as the market is hoping right now. That's definitely a big issue, but I do think it's important to take a step back and keep in mind that the trajectory is probably still the most important factor. As long as the Fed is going to be easing by mid this year or the second half this year, and at least having a few rate cuts, and that trajectory continue to be down, if we get good inflation numbers, not just tomorrow, of course, but also in the coming months, I think that's still what will help to stabilize and allow the markets to advance. I think what the Fed does is important, but parsing over whether we get 4 rate cuts or 5 or 6, or even 3, I think is less important than keeping in mind and understanding that overall trajectory and that trajectory remaining in place.
What do you think a soft landing would mean for the markets?
Well, I think a lot of that is priced in here already. So I think that the markets certainly at the end of the year, when it sort of coalesce around this idea of a soft landing, that's why we saw such a strong rally as we did, along with those longer term yields, the 10-year Treasury yield, for example, falling as much as it did and sort of easing some of those strains in the financial system and easing borrowing conditions a bit. So, what does a soft landing mean? Given that a lot of it's priced in already, I don't think it means that the market goes gangbusters here. I think it meets the market's expectations. I think it means a healthy market, but I don't think it means a runaway market the way we had at the end of 2023. Simply a healthy market, but one that's also relatively broad-based in terms of the ability for various sectors and various types of stocks to perform well, not just the mega cap technology stocks.
So, Young Yu, what do you think about the fixed income space? Our friends in fixed income actually had some positive performance last year thanks to that rally at the end of the year, and that's, of course, in contrast to 2022 when it was just brutal out there for our fixed income friends. How do you think about that allocation this year?
Yeah, fixed income had a dramatic end of the year. There were very strong gains both in the safe areas of fixed income, that what we call core fixed income, but also in credit as well, a very strong rally. In 2024, we think those returns to fixed income will be relatively modest, not bad, but more in line with historical averages. So if we're thinking about, the safe areas, investment grade, corporate bonds, we think that's probably going to return in the mid 5% range. We think right now where the 10-year Treasury yield is, probably has some room to climb up in the second half of the year. We don't think it's going to continue on a downward trajectory, so we're not going to see a lot of price gains. And on the contrary, we might see some modest price declines toward the end of the year if that 10-year Treasury yield rises a bit, as we think it will. So a modest year for fixed income, but also a year where fixed income is an important part of the portfolio. We do think that if we do get more turbulence than we expect in the economy or in the markets, that having that fixed income portfolios really helps to stabilize portfolios here. So I think it's really a balanced type of approach that we think makes sense this year in terms of taking on risk and having fixed income as an important component of portfolios.
And with CPI coming out tomorrow, what will you be keeping a close eye on? What sectors are you going to be looking at?
Well, I think it's less about specific sectors for us and more about the across-the-board nature of how the numbers come in. And what we want to see is consistency. We want to see that the decline in inflation is really consistent across categories, that it's muted, that we're not, that the modest inflation numbers, if we get that, is not due to just a few categories really falling precipitously. That's really more across the board. And of course, services play into that quite strongly because we know goods inflation has been on the downward decline for decades, and it's really services that is potentially the more sticky component. So, that does play into areas such as restaurants and other service areas, but we do think that seeing a broad-based decline in inflation is probably the most important consideration in that CPI report coming out tomorrow.
All right, if we're going to have some kind of movement down in rates, Young Yu, but maybe not as much as the market is discounting, what are the sectors in the equity space that you guys are focusing on this year? Is it still, you know, kind of the big tech names that ran last year, or do you try to find some value elsewhere?
Well, we think tech will do fine. We think the trends certainly still look favorable for technology, so we're not shying away from that. But we do think this year will include favorable returns to other areas of the market, such as value. We think small cap value, for example, the valuations in that space look relatively attractive, so we want to have some exposure there. We continue to like U.S. infrastructure. We've liked that for all of last year. We continue to like that. We think there's a lot of money that will flow into that space for a number of years still, and it's a relatively narrow slice of the economy. So when you get hundreds of billions of dollars flowing, or hundreds of millions of dollars flowing in a relatively small slice of the economy, it really helps to juice that sector. And we think that a lot of factors are aligned to help U.S. infrastructure this year.
All right, you talk tech. How about bank stocks? I mean, we have big earnings coming out on Friday. What are you looking for there? What's your take?
Yeah, the bank stocks are an interesting one here. You know, we do think the large banks, you know, when we think about oftentimes the banks are parsed between the 25 largest and then medium size and smaller banks. We think the large banks are probably better positioned than the smaller banks here. The smaller banks still have a lot of commercial real estate and office space on their books that's going to take a while to work through. We think also that some of the trends we're seeing in credit card delinquencies is really more pronounced among some of the small banks, some of the challenges in that space. So we think the banking space is really going to be a bit bifurcated in terms of the fortunes of the banks, that the strong and big and stable ones will continue to do well, and the smaller ones will probably take some time to work through some of those headwinds that will remain in 2024 and perhaps beyond as well.
All right, Young Yu Ma, thank you so much for joining us. Young Yu Ma, he's the CIO at BMO, that's Bank of Montreal Wealth Management. Appreciate getting a few minutes of his time. I'm just looking at Bitcoin, Lisa, up just about 0.4%, 45,600. The expectation here, just getting some more notes from the Bloomberg's news desk, that again, kind of expectation is sometime after the close, we will get the ruling from the SEC. And as James Seifert from Bloomberg Intelligence said, he fully expects it to be an approval of not just one, but all of the S1 filings there.
And they're not going to announce it on Twitter.
I hope not. Yeah, it's going
to be on their website, yes.
That didn't work out so well yesterday. Again, yesterday's news was on the official Twitter account /X of the SEC that they had approved it when, in fact, that was incorrect. So they had been hacked, apparently. So Fed Chairman Gensler came out just immediately afterwards and said that was not the case, that had not been approved yesterday. So we'll stay on top of that. Right now, let's head down to Washington, D.C. We'll get world and national news with Nancy Lyons.
Thanks, Paul. The House Oversight and Judiciary Committees both plan to vote on holding Hunter Biden, the president's son, in contempt of Congress for failing to sit for a private deposition. Hunter Biden surprised the lawmakers and showed up today ahead of the vote. He did not speak, but his attorney, Abby Lowell, did after leaving the hearing room.
The Republican chairs today, then, are commandeered an unprecedented resolution to hold someone in contempt who has offered to publicly answer all their proper questions. The question there is, what are they afraid of?
Hunter Biden's attorney, Abby Lowell. The inquiry, which began in September, has so far failed to uncover any evidence directly implicating President Biden in any wrongdoing. Republican presidential candidates Ron DeSantis and Nikki Haley will be taking the stage tonight for a one-on-one debate. Bloomberg's Anne-Marie Hordern reports.
It's going to be a big test, really, of how far DeSantis and Haley are going to go in attacking Trump, who's deciding to skip this debate. He skipped all of them, and he's doing a big counter-programming because he's going on Fox News News, where a lot of Republicans traditionally watch, and him making his final pitch for these Iowa caucus goers to come out and vote for him. So I want to see how much they're willing to go against the former president and how much they're going to go against each other.
Again, Bloomberg's Anne-Marie Hordern. At least 5 people killed, multiple others injured across 6 states amid severe weather yesterday. At least 23 tornadoes reported from Texas to Georgia. Bamberg, South Carolina was among the communities hit by a tornado. State Representative Justin Bamberg.
A lot of people, after the tornado hit, they looked up and they saw trees and sky in their living rooms or bedrooms.
The storm knocked out service on some train lines in New York City. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story headline from the Bloomberg Professional Service. Treasury Secretary Janet Yellen says the administration is reviewing China tariffs and says they could be made more strategic. It is an update for the U.S. stock market with the Dow, the S&P, NASDAQ all in the green. Stocks, bonds, and the dollar are seeing small moves as investors await tomorrow morning's inflation data for clues about the Federal Reserve outlook. Right now, we've got the S&P up 13, gain there of 0.3%. Dow Industrials up 53, gain of 0.1%. The NASDAQ Composite Index higher now by 71. That is a gain of 0.5%. The Russell 2000, though, trading lower. The index of small cap shares down 3 points now, a drop there of 0.2%. 10-year yield 4.01%, with a 2-year that's yielding 4.34%. Gold down $5 the ounce to 2025, drop there of 0.3%. Crude oil lower now by 1.1%, 71.45 a barrel. Bitcoin trading higher by 1.2%, 45,975 on Bitcoin. The SEC is widely expected by analysts to announce a decision about a Bitcoin ETF today. Michael Dart is chief economist at Roth Capital Partners, and this morning on Bloomberg Surveillance, he told us investors must be cautious.
This is an extremely volatile asset. It's subject to extreme booms and then extreme busts. We've already seen that play out in this cycle. So a heck of a year last year, but the year prior was a big collapse. So I would say if one is going to make an investment there, if it's going to be part of the portfolio, it needs to be a very small percentage, and you have to understand what the risks are.
And, of course, stay with Bloomberg Radio. Keep it locked in for the very latest on that Bitcoin ETF. Again, Bitcoin up now by 1.3%. Hewlett-Packard Enterprise makes it official. As you heard on Bloomberg Radio, it is buying Juniper for $14 billion. HPE up 1.2%. Juniper now up by 2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pell, thank you so much. We appreciate that. Lisa Mateo and Paul Sweeney, we're live here in our Bloomberg Interactive Brokers studio. Again, I've been saying it for a long time here. If I were to come back into this Wall Street business again and start the career over again, I might really think about the private credit business because, boy, has that really just exploded in terms of the assets being allocated to private credit. And one of the folks doing that up in Canada is Arif Balwani, CEO of Third Eye Capital. And Arif, I think that could work for you because I went through the Chase Manhattan Bank credit training program. So I am as good as anybody out there on private credit. Talk to us about kind of how you approach the private credit business.
Yeah, appreciate it. Thanks for having me on. And you're absolutely right. Like everybody's getting into the space, and there seems to be a private credit fund forming every minute. So we operate in Canada, and Canada's a very unique market. I mean, in contrast to the United States, Canada's business lending markets are really dominated by an oligopoly of banks. So every year, Canadian businesses borrow about $320 billion. 80% of it comes from the banks. Now, you contrast that with the U.S., where banks, I think despite there being, about 4,000 of them, account for only 20% of the annual business lending volumes. So private credit in the United States is probably about a $1.5 trillion market. In Canada, it's probably less than 30 billion. So you got a U.S. economy that's 10 times the size of the Canadian economy, but a U.S. private credit market that's 50 times that of Canada. So comparatively, a lot of white space for growth in private credit in Canada. This is where we've been trafficking since 2005. And we're really seeing the attitude change towards private credit. In this country, there's a much broader awareness of private credit as an option, broader acceptance that private credit's not just a lender of last resort. And for a long time, there's been this cultural perception in Canada that if you can't obtain bank financing, then your business is too risky or you've got a problem. And that's changing. And private credit, the U.S. has recognized this for a very long time. But private credit, right, can provide speed, certainty, customization, and in some cases, value-added services like strategy and networks that banks can't provide.
Now, what about some of the regulation behind it? So if private credit, if it attracts more investors, was it also going to attract the attention of those regulators that are looking for that transparency?
You know, that's a great question. You know, if you look at what's happened since the great financial crisis, right? So private credit's been really been booming, and particularly in the U.S. So if you take from, I think, 2007 to last year, AUM has grown by something like 75% a year. I mean, it's just been incredible, and the bulk of that has been U.S. private credit funds, and the asset class has gone from representing virtually 0%, you know, of the global alternatives market to something around 12%. And I think every institutional investor survey out there says even more money's going in to the private credit space. And I think that's why many people are hailing the asset class as being in its golden age. And in the U.S., you know, it's no longer rare to see a private credit loan top $1 billion or see the closing of a multi-billion-dollar private credit fund. And so to your question about regulation, you know, the largest funds are getting bigger, and they're creating asset pools that are larger than some of the SIFIs, right? What they call the systematically important financial institutions that U.S. regulators consider, you know, potentially pose a serious risk to the economy if they were going to collapse. And I think if you start seeing these firms continue to grow and increase their interconnectedness into the financial system writ large, I think you could see them subject to SIFI rules, which means, you know, certain minimum capital requirements. There could be, you know, some changes in risk management practices. Maybe it means you have a bank supervisor, regulator parked in your offices more often. So, you know, a lot of these private debt firms, I think, could lose their scale advantages if the regulatory lens gets wider.
Hey, Reef, for you guys at Third Eye Capital, what's a typical transaction look like? You have certain industries you like. Do you have certain capital structures you like? What gives us just a sense of kind of the business you guys are in?
Yeah, so we're there to fill a gap in the market where traditional financing sources and in Canada, that's primarily banks, are often overlooking or just don't understand. And so our focus is really providing asset-based capital solutions. We like to say that we have lots of solutions looking for problems. And so the types of companies that come to us are companies that will be perceived as being too risky or too complex for a bank to understand. So an example of a transaction we did recently was where we took a company that was public, privatized it because the public market was no longer being charitable to the company's growth initiatives. Its valuation had fallen, and management and owners felt like the public markets were no longer properly valuing the business. And so we helped the company privatize. There's a underlying turnaround that will help affect, which is part of our DNA. We're very restructuring oriented, and we'll help that company get to a better place while it's private, outside of the eye of public shareholders, and then look to bring it back either public or sell it in a few years.
All right, Arif, thanks so much for joining us. Arif Balwani, CEO of Third Eye Capital, talking about the private credit business. It is a huge business, certainly in the U.S. and growing in Canada, as Arif mentioned. And a lot of it here in the U.S. is driven by private equity looking for credit solutions. And it's not so much that they can't go to the banks. It's oftentimes the banks really have backed away from some of that leverage lending, cash flow lending businesses, and maybe a little bit more risky on the credit scale. And these folks step in and they have their credit chops and they can get some good fees, and it's been a growth business, and a lot of capital has flowed towards private equity. So that's why we like to stay on top of that, talk to as many players as we can in the space. We're going to have more coming up. This is Bloomberg. Let's get some company news right now with Denise Pellegrini.
All right, thank you, Paul. And from Bloomberg World headquarters in New York, we're tracking it all for you here on Bloomberg Radio. The FAA says those 737 MAX 9s, well, they do remain grounded until everyone is sure that they are safe. Boeing CEO Dave Calhoun telling his employees the Alaska Airlines incident with that door plug falling out mid-flight was a mistake.
We're going to work with the NTSB, who is investigating the accident itself to find out what the root cause is.
And Boeing shares, well, they are higher right now. Big name in big tech has a big new passion. Bloomberg's Steve Rappaport explains.
Mark Zuckerberg is now a cattle man, raising cows on his ranch in Hawaii. The Meta platform CEO says the animals will feed on macadamia meal and wash it down with beer, both homegrown on his estate. Zuckerberg announced his farming ambitions in an Instagram post alongside a photo of him dining on steak. The billionaire businessman writing his goal is to create some of the highest quality beef in a process that will be local and vertically integrated. Zuckerberg added, of all his projects, this is the most delicious. Steve Rappaport, Bloomberg Radio.
All right, thank you, Steve. Job cuts at Amazon live streaming site Twitch, cutting 35% of workers. And LeBron James switching trading card companies, signing an exclusive multi-year deal with the collectibles division of Fanatics. Now, this comes at the end, you recall, of that deal with rival trading card maker Upper Deck. The Fanatics partnership will begin this month with LeBron donning his old high school uniform on an autographed card alongside his son. And those are some of the company stories we're following this hour. I'm Denise Pellegrini. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, looking at these markets here, we have the S&P 500 up about 0.3%. NASDAQ's up about 0.5% there. Looking at the yield space, pretty steady. The 10-year Treasury's 4.01% on your 10-year. Gold is off about 1.3% today, $71.20 per barrel. And Bitcoin finding a bid out there, up about 1.9%, 46,280 we'll call it. And again, on the Bitcoin, waiting for that announcement from the SEC. It's expected today after the close about getting approval or not for a spot Bitcoin ETF. So we'll stay on top of that. Carol Master and Tim Stenovic will be all over that when that hits the tape. Right now, let's head down to Washington, D.C. Nancy Lyons has got World and National News for us.
Thanks, Paul. House Republicans, just back from their winter break, are planning to hold Hunter Biden in contempt of Congress for refusing to testify privately on his business dealings. Biden has agreed, however, to speak at a public hearing, and today he surprised lawmakers by showing up to this morning's hearing. Congressman Jamie Raskin criticized the chair, James Comer, for inviting Biden to choose how he wanted to testify, then reversing course.
On December 6th, Hunter Biden's lawyer reiterated that Hunter Biden was willing to accept the chair's original request and once again offered to appear on December 13th or any other date in December to answer any question pertinent and relevant to the subject matter.
Republicans refuted Raskin by saying Hunter Biden does not choose the rules and he is in violation of their request for a private deposition. Biden says he is reticent to sit privately for fear his testimony would be twisted to meet the Republican narrative. House Republicans today are also moving to impeach the Secretary of Homeland Security, Alejandro Mayorkas. Today they're hearing from several attorneys general from states that have been impacted by the influx of migrants. Republicans blame Mayorkas for failing to enforce U.S. laws on immigration. The Houthis, based in Yemen, yesterday launched their largest missile and drone attack to date on ships in the Red Sea, and U.S. Secretary of State Antony Blinken is calling on them to stop.
There'll be consequences for the Houthis' actions. We've also repeatedly tried to make clear to Iran, as other countries have as well, that the support that they're providing to the Houthis, including for these actions, needs to stop. It's not in their interest to see the conflict escalated, and we're not the only ones who sent that message to Iran.
Blinken spoke from Bahrain. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Paul and Lisa.
All right, Nancy Lyons, thank you so much. We appreciate that. I'm looking at Dish Networks. It's now part of its sister company, and it's EchoStar. It trades under the symbol SATS, S-A-T-S. It's up 30% here today, but the bonds are really getting crushed here. Dish Network bonds plummeted Wednesday after the company announced a move to shuffle assets, including valuable spectrum licenses, into a new subsidiary, worrying holders of its more than $20 billion of debt. The Englewood, Colorado-based company transferred a handful of wireless spectrum licenses into a new legal entity under EchoStar, according to a Wednesday statement. Dish also said it freed from debt covenants a new unit holding 3 million television subscribers, known in industry parlance as designating an unrestricted subsidiary. Shuffling assets and creating unrestricted subsidiaries are often preludes to money-raising deals that hurt existing creditors by weakening their claims to collateral. Debt investors have been fighting over and living in fear of aggressive versions of those moves, like a now infamous financing from J. Crew Group for years. More of Dish's debt fell into distress levels after the maneuver. Data compiled by Bloomberg show with $11.9 billion of its bonds trading at more than 10 percentage points above treasuries. That compares with $9.4 billion at the start of the week here. So again, bonds down, but the stock up. Charlie Ergen at Dish Networks at EchoStar has a lot of spectrum, wireless spectrum, and he's saying he's going to build a wireless network in the U.S., and a lot of investors are skeptical about his ability to do that and think maybe a better use of that spectrum is maybe sell it to one of the existing wireless providers in the country. But Charlie's going to move forward with that build-out. So again, a lot of concern amongst the creditors. Right now, Sound On with Joe Matthew from Washington, D.C. That starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from DC's top names.
So Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Where's Hunter? Well, he's on Capitol Hill. Welcome to the fastest show in politics as President Biden's son shows up at his own contempt hearing and quickly sends things off the rails. We'll have the latest from the Hill for you. We'll discuss the case ahead with Michael Zeldin, the former federal prosecutor, also weighing in on Donald Trump's legal woes. It's been quite a week already as the former president tests the theory of presidential immunity. Only 10 days now to a possible government shutdown, and it's time for the final Republican presidential debate before Iowa. We'll have analysis on all of these stories ahead. Bloomberg politics contributor, Republican strategist Rick Davis, joined on the panel today by Democratic analyst Caitlin Legacki, and it's all after a look at Wall Street. We start with midday trading now and an update from Charlie Pellet in New York. Hey, Charlie.
Well, hello there, Joe Matthew. Good day to you. We've got the Dow, the S&P, NASDAQ all in the green. Not just that, best level of the day right now on the S&P 500 index. And wait, there's more. The S&P 500 index is now positive on the year, barely up by 0.02%. But in the year-to-date column, we're looking at green on the screen right now. S&P up 12, up by about 0.3%. We have got the Dow up 42 now, higher by 0.1%, and NASDAQ is up 64, gain there of 0.4%. 10-year yield 4.02%, the 2-year 4.35%. Gold down $6.50 the ounce to 2023, drop there of 0.3%, and West Texas Intermediate crude down 1.5%, 71.16 a barrel. Bitcoin Wednesday, and Bitcoin up now by 2.2%. 46,343. We are expecting to hear from the SEC after the close of trading. So again, the 10-year right now, 4.01%. The 2-year, 4.35%. What about the backdrop? Colin Martin is Director of Fixed Income at Charles Schwab.
We think 10-year Treasury yields at 4% are right where they should be. Now, it doesn't mean that there can't be a lot of volatility. In fact, we do expect a lot of volatility as you sort of get that push and pull between Fed projections and what Fed officials are telling us versus the aggressive pace of rate cuts that the markets are forecasting right now.
And you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. CPI tomorrow morning, big bank earnings on Friday. Right now we have got bank stocks. For the most part, they are trading lower. Case in point, JP Morgan Chase down by about 0.5%. Citigroup shares down 1.4%. Wells Fargo down 1.2%. Bank of America down 0.8%. Recapping stocks higher. S&P up 15, up 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie. We thank you and welcome you to the Wednesday edition of Bloomberg Sound On. I'm Joe Matthew in Washington. It's good to see you on the radio, on the satellite, and on YouTube. You can find us there right now. Search Bloomberg Global News. Because I'm confused. And if you listen to this broadcast from time to time, you know that's not unusual. As we talk about new deals on top-line spending levels that are identical to the deals we saw back in June. When we have contempt hearings, in this case, for the son of a president, and he actually shows up. That happened today. We were going to talk to Michael Zeldin about Donald Trump, and we're going to do that in a moment, but who would have thought this would take place? Maybe you saw it coming. Oversight Committee hearing, holding Hunter Biden in contempt for not showing up to a deposition that he actually showed up for. They wanted to do it behind closed doors. This starts to get very complicated. Nancy Mace couldn't believe it when he walked in. The representative on the Republican side of the dais here had it out with Jared Moskowitz, the Democrat. This is just a taste of what it was like in the room.
You are the epitome of white privilege, coming into the Oversight Committee, spitting in our face, ignoring
a congressional subpoena to be deposed. What are you afraid of? You have no balls to come up here and...
Mr. Chairman, point of inquiry.
Mr. Chairman,
If the gentlelady wants to hear from Hunter Biden, we can hear from him right now, Mr. Chairman. Let's take a vote and hear from Hunter Biden. What are you afraid of?
Hold on. Order.
Are women allowed to speak in here or no?
And that's just how it started. I'm still not sure, though, if you show up, how that means you didn't show up, but maybe Michael Zeldin can help us. I've got a lot of questions for Michael, of course, former federal prosecutor, former special counsel to Robert Mueller while at the DOJ. Michael, you've been on my mind, and it's great to see you. I'm glad that you could come back to join us here early in 2024, because, boy, this is going to be a year, and not the least of which is because of this Hunter Biden case. I want to ask you about Donald Trump, but can you make sense out of this? Can you hold someone in contempt for a deposition they showed up for?
Yeah, you can. You shouldn't, but you can. The proposition here is they gave him a subpoena to appear behind closed doors for a deposition. He says, I'm not showing up behind closed doors. I'm only showing up in public because I don't trust you. Well, people who receive subpoenas don't get to determine the protocols by which the testimony is taken. So that's sort of the, pissing match, if you will, between the two sides. The question is really, why are they even bothering to subpoena him in the first place? What value do they see when, if I were his lawyer and he's represented ably by Abby Lowell, I would just say, I'm taking the Fifth Amendment with respect to any question that you have to ask me in private, because I don't trust you guys, and I've been indicted in California, and I'm not about to jeopardize my legal case there by answering any questions that you guys have here. So it's really political theater. This is not really about truth gathering or fact finding. It's just about show.
Well, that's a pretty clear answer, I suspect, but it won't stop the process, to your point. In terms of that indictment, though, in California, he's heading for L.A. next, apparently. What's in store for Hunter Biden when he gets there?
Ultimately, a trial, unless they work out a plea deal. He's facing tax charges out there that are serious. He failed to report income and failed to file timely his tax returns worth, over $1 million in lost tax revenue. He did ultimately pay it back, but, the fact that you sort of returned the money that you stole from the bank doesn't get you necessarily off the hook for bank robbery. It may get you a plea bargain to something less than bank robbery, but nonetheless, these are serious charges and he has to account for it. He has said that it was because of his drug addiction, and I understand well the problems of drug addiction in family members, and it's complicated stuff, but that's not a defense unless you're pleading some sort of diminished mental capacity. I think that he has to figure out what is the best thing for him to do. I think the best thing for him to do is probably work out some sort of plea like they tried to do when he was facing charges in Delaware, misdemeanor charges. But we'll see now whether the prosecutors out in California are, as willing to compromise with him as Delaware special counsel was.
Well, Hunter Biden was the big moment today. Donald Trump's moment came yesterday, Michael Zeldin. This is really something as he tests this idea of presidential immunity, and his legal team got a fairly chilly reception from this three-judge appellate panel. This is what Axios is now calling Trump's new Fifth Avenue moment. As his lawyer, John Sauer, was asked by one of the judges about this idea of, well, we'll let you listen.
Could a president who ordered SEAL Team 6 to assassinate a political rival who was not impeached, would he be subject to criminal prosecution?
If he were impeached and convicted first. And
so your answer is
no. My answer is qualified yes. There's a political process that would have to occur under the structure of our Constitution, which would require impeachment and conviction by the Senate.
Imagine SEAL Team 6 being used to assassinate a political rival. Maybe you can imagine that. The idea here, though, Michael, is that if not impeached and convicted, then you cannot, in fact, criminally prosecute a former president or a sitting president. Is that how you understand this argument? Does it hold any water?
that's how I understand the argument. I don't think it holds any water. And in fact, in preparation for our conversation, I went back and read the Office of Legal Counsel memoranda on these issues. Remember, this sort of came up in the Mueller investigation. Mueller said he might have, but couldn't indict Trump or the stuff that he investigated because there's a memo that says you can't indict a sitting president. But that memo goes on to say, of course, you can indict a former president. And the case law is pretty clear on that. And so it's pretty settled that the proposition that Trump is proposing is an outlier and probably will not be sustained by the Court of Appeals or even, I think, the Supreme Court.
Well, talk to me more about that, because a lot of folks seem to think that's where this will be decided. Will the Supreme Court take this up if it goes that far?
Yeah, so Joe, that's a great question. And I think the answer to the question is it depends on the nature of the order that the appellate court issues. So if this appellate court gives a 3-0 unanimous decision, forcefully suggesting that the notion of immunity for a former president in criminal matters is absurd, then the Supreme Court might say, you know what, we don't have to decide this issue. We'll wait till a more complicated issue that raises this question. But in this case, the proposition that you are entitled to qualified immunity for inciting an insurrection is so, sort of much a no-brainer that we're going to just rely on the Court of Appeals and leave it there. And remember, they asked, Special Counsel Smith asked the Supreme Court to take this straight away, to skip this middle ground. And the court said, no, we want to hear from this middle ground court. And so if this middle ground court gives them a very strong, analyzed decision, they might say, we don't need to do it. They got it right. Let's get this case to trial, and then we'll have a trial in March.
So it sounds like that's what you see happening. The skepticism on this 3-judge panel, if this goes all the way up to the full-blown D.C. appeals court, do you assume those judges will feel the same way? I think that's what you're suggesting, and that means the trial does begin long before the election.
Yeah, so the rights that Trump has are to, one, let's say he loses 3-0 in this court, or even 2-1 in this court. He can then he can seek a review of that decision by the full members of that same court. I think there are 11, and that's called en banc review, total review, and that's discretionary. Those 11 judges can say, no, we don't need to hear this. The 3-judge panel got it right. Then that forecloses that. Then he can file what's called a writ of certiorari, a request by the Supreme Court to hear it, and the Supreme Court can say yes or no to that. If they say yes, and let's say that makes it to them sometime in early February, then I think the March trial date is unlikely. But it doesn't mean that it can't happen in May or June if the Supreme Court acts quickly as they did in the Nixon-Watergate tapes. And they have that power to do that.
Wow. That would be the one trial, though, you see happening before the election, right?
I think it's most likely because Eileen Cannon, the judge who has the Mar-a-Lago case, seems to be slow-walking it a bit. Now, if this case gets delayed, if there is, a long delay in this case, Eileen Cannon could set her trial date in May and go forward with it. But I expect that Trump will raise the same immunity in that case, too. So I think we need to get an answer on immunity before we know what the trial schedules are, both in Mar-a-Lago case and in January 6th case.
Wow. It's great to talk to you. Good to see you, Michael Zeldin. We thank you, former federal prosecutor Michael Zeldin, with us once again here on Bloomberg. As we assemble our panel, can't wait to hear what they think. Rick Davis is with us, of course, Republican strategist, Bloomberg Politics contributor, joined today by Democratic analyst Caitlin Legacki at Four Corners Public Affairs. Rick, we've talked a lot about the idea of Donald Trump spending the bulk of his campaign in a courtroom, and it is sounding like, after we talked to Michael Zeldin, that that's exactly what's going to happen. He'll be back in New York tomorrow for the civil trial. How do you do both at once?
Yeah, well, I mean, he's making that decision. I mean, yesterday's appearance was totally elective on his part. He didn't have to go there. He didn't do anything. And he could have been in Iowa campaigning. He could have been in New Hampshire campaigning. Look, if he loses New Hampshire, his campaign's going to look at him and go, what the heck were we doing sitting in a courtroom when we could have been in the state campaigning? So I feel for those guys. I mean, they're sharing, the former president with the legal system. And that can't be a very, constructive way to spend time in the middle of an election. So it's his choice in many of these cases. And he chooses to not campaign and to defend his rights as a plaintiff.
So, Caitlin, at what point does that become advantage Biden, assuming that these are the nominees? And I guess I shouldn't assume that, but let's say it's a rematch. At what point does this start to count against Donald Trump when he enters a general election field?
I mean, it immediately reminds moderate and independent voters of the chaos that he created while he was president. So, while he believes that going to court every day and presenting himself as a victim of political persecution works to his benefit, I think where it really, helps Biden is that it just, time warps everyone back 4 years to what we went through with the chaos and the legal issues, and reminds anyone who's even remotely open to either candidate what they should expect for the next 4 years out of Donald Trump.
Mm-hmm. In the meantime, though, Rick, it seems like it's advantage Trump as long as it's the primary field, the Republican primary field that we're talking about. Or do you see that start to flip at some point in the next couple of months?
Well, there's no question that Trump's campaign started to improve once Bragg in New York indicted him. And you saw an increase in fundraising, and he became the victim, as Caitlin said. This is his entire campaign message. I am a victim. You're victims. We're all defending each other here. They're really coming after you. And it's all very populist and very outsider and very anti-government. So I don't think that's ever going to change. And the fact that he gets a stage to do that, in a courtroom where he can walk out and give his talking points of the day in front of a massive crowd of reporters, that's just as good to him as a rally and a lot cheaper.
Well, how about that? The king of free media. There is something to be said for that, I suppose, Caitlin, because he's going to end up leading the newscast every time he shows up in a courtroom.
He is, although, we've already seen him run into issues related to gag orders and, in some of his other trials. And so I wouldn't, if that is their entire strategy, then I think that they should at least have a plan B in place, because I can't imagine that especially judges in the D.C. circuit are going to have a high tolerance for those shenanigans.
Well, part of the strategy apparently includes a return to Fox News tonight, counter-programming the final GOP debate. We'll talk about it next with the panel. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg, and we begin with a developing story headline off the Bloomberg Professional Service with Alaska Airlines providing an update on the MAX 9. Now, Alaska says it is canceling all Boeing MAX 9 flights through January 13th. It also says that the MAX 9 cancellations will total in the range of 110 to 150 flights a day. Again, Alaska canceling all Boeing MAX 9 flights right through January 13th. Shares of Alaska Airlines, right now, they are down by just about 1.5%. It is an update for the U.S. stock market with the Dow, the S&P, and NASDAQ all advancing. The S&P once again positive on the year, an 11-point gain right now, higher by about 0.3%. We've got the Dow up 44. That is an advance now of 0.1%. NASDAQ 100 index up 70, a gain there of 0.4%, while the NASDAQ Composite Index also higher by 70 points, up by about 0.5%. Small cap shares, though, in the red. Russell 2000 down by 0.2%. 10-year yield 4.02% with a 2-year that's yielding 4.35%. Gold down just about 0.3% right now. 2,022 the ounce. West Texas Intermediate crude down 1.5%, 71.14 a barrel. Bitcoin higher by 1.8%. Bitcoin now at 46,246 as we await word on that Bitcoin ETF. Amazon laying off hundreds of employees in its Prime Video and Studios business. Also this morning, Amazon's live streaming site Twitch said it was cutting 35% of its staff. Amazon shares right now, they are higher. We've got Amazon up by 1.7%. Recapping, stocks higher, S&P up 12, up 0.3. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Last time Donald Trump appeared live on Fox News was back in April of 2022, almost 2 years. And it hasn't been the smoothest ride since then. He's spent a lot of time criticizing the network, and tonight will make his big return. This ought to be interesting. Of course, it's all part of counter-programming the actual debate that's taking place around the same time on CNN. That'll be between Nikki Haley and Ron DeSantis. This is the last throwdown before actual voting takes place, actual caucusing on Monday. And look, Donald Trump could be on that stage if he wanted to be, but not again. So this is going to be an interesting exercise to see the former governor of South Carolina in Nikki Haley and now the governor of Florida, Ron DeSantis, just the two of them on stage. They're both going to get a lot of time and presumably will have a chance to talk about actual policy. What a concept. Let's reassemble the panel because, you know, a lot of people are going to be watching Trump for the fireworks. Rick Davis is with us, of course, Bloomberg Politics contributor, Republican strategist. Caitlin Legacki from Four Corners Public Affairs is here too, Democratic analyst. Rick, it's going to be interesting, another split screen night here, and I wonder, for the candidates themselves, the Trump show is its own thing, but for the candidates themselves, if there's going to be any real opportunity to move the needle here.
Yeah, I think there'll be an interesting debate between Nikki Haley and Ron DeSantis. Look, I mean, they're running neck and neck in Iowa for second place. We've all been talking about does second place matter in Iowa this year, and I think the conclusion is yes, certainly for Nikki Haley, and it may be the only thing that sustains Ron DeSantis beyond Iowa. So I think there are real stakes to tonight's debate. It's unfortunate that the real contest in this case, Nikki and Ron, are going to be on CNN. And most of the Republican caucus goers, I promise you, will be watching the Fox News interview with Donald Trump. Okay. Because that's what they watch every night. It's nothing special.
Well, then I guess it's a pretty good strategy. Caitlin, he's never had to show up at a debate. He has held a commanding lead throughout the process. And we're reminded by the New York Times, this is his first live interview on any major news network since that so-called town hall last May on CNN that got the head of the network fired. And that was because Donald Trump just ran all over the whole process, and I suspect he will do the same tonight. What are these folks going to see when they tune into Fox? Does he take the opportunity to insult the network?
Oh, I think he can't help himself. I think that's absolutely what he's going to do. But I think he's also doing this because he does see the numbers coming out of New Hampshire. He does see Nikki Haley closing in on him there. And he really needs to reestablish his leadership there. So what he's doing is actually pretty smart, which is that, as Rick said, your average conservative caucus goer primary voter in New Hampshire is going to be watching Fox. And so he is owning all of that oxygen while, Governors Haley and DeSantis fight it out for second place on a network that your average Republican primary or voter or caucus goer just isn't going to be watching.
Well, it sounds to me like the field is set then, Rick, as we head into Iowa. Nikki Haley, Ron DeSantis aren't going to have a breakout based on what happens tonight, right?
Yeah, I think tonight's CNN debate is more about what ad goes up as a closing argument the next morning, right? I mean, if somebody falters, if there's a punch well landed on the jaw of one of the other candidates, that could actually make it into the weekend closing. But otherwise, most Republicans aren't going to see what happens on that CNN debate. Lots of Democrats will watch it, but because I'm sure it's good theater. But yeah, I think we've all agreed that once again, Donald Trump gets the lifeline from Fox Media to give him something to do when he otherwise would be left out of the narrative.
Latest numbers coming from Trafalgar Group on the Iowa Republican caucus. Donald Trump, 52. And then you've got Nikki Haley and Ron DeSantis tied at 18. So Donald Trump has a 34-point lead going into the caucus at this stage here. Caitlin, Ann Seltzer and others would tell you that that's a done deal. Will he win Iowa?
Oh, of course. Yeah. I mean, anyone who's ever done the Iowa caucus has dreamed of a scenario where they're at 52%. It's unprecedented. So I think that's absolutely locked. The real question is, how does this affect New Hampshire? Does this kill Nikki Haley's momentum? Or does this, basically put the last nail in Ron DeSantis's coffin, which would give, theoretically Haley a clearer path in New Hampshire? And so I agree that that's the whole ballgame for what Iowa means.
Rick, I want you to take us to school on something called momentum, which we talk about affectionately around this time of the election cycle. But you've actually harnessed it. You've actually realized it. When we look at the numbers moving beyond Iowa and New Hampshire right now, all of that could change immediately based on the performance that we see, specifically coming out of New Hampshire. I know you've got your eyes on Nikki Haley, but talk about that just kind of more in general, how she could turn this around, how any candidate might, based on momentum in the first two states.
Yeah, I think people need to really understand the dynamic politically, right? The Iowa caucus is an organizational nightmare, right? It is not a primary, doesn't have a lot of people participate. In fact, considering how cold it's going to be and how snowy it is in Iowa right now, you got to assume participation is going to be way down. But that is usually what upsets the apple cart. In other words, it hurts more people than it helps over time. In New Hampshire, it is a true primary, and everybody can vote, right? It's an open primary. Independents participate. Sometimes as much as 40% of the turnout on primary day is non-Republican. And so this is a chance for people to really speak, the first chance. And that usually has a different outcome than Iowa. And that usually is a lifeline to challengers like Nikki Haley in this case. Because you got to remember, Donald Trump's running as an incumbent. None of these people should even be close to running against an incumbent. I mean, Joe Biden's an incumbent running, and he's in the 60%, and he's not even on the ballot. So this is the chance that everybody has to try and play catch up. And then it is all about momentum. Every poll you've seen in South Carolina, Florida, the Super Tuesday states, they change overnight depending upon the outcome of this race in New Hampshire.
I hope you heard what Rick said. They change overnight. That's why it's comical that we're obsessing over polls 9 months ago, national polls, but even calls into question what we're looking at here in the next month of voting even. Caitlin, can Nikki Haley pull that off?
I mean, anything is possible in politics. I think one of the things about the primary calendar that a lot of folks don't appreciate is that all of these campaigns have been spending the last year really focused on 2 states, maybe 3. And where this really tests a campaign's ability to function and organize is, let's say Nikki Haley comes out of New Hampshire with an upset victory. She's going to have a huge influx of money, but she's also going to have to carry that momentum forward. Luckily, she has South Carolina probably in her pocket. But then there's all the Super Tuesday states where if, your campaign has not previously had the opportunity to build up that staffing, build up that strategy, you're really playing whack-a-mole and leapfrogging from one state to the next. And it's hard. But that's kind of why this is so exciting and interesting. And it really is a good test for who is going to be the best general election candidate.
Fascinating what we're about to learn. And great analysis from Rick and Caitlin. I'm glad you're both with us. We're going to have a lot more coming up next here on Sound On. As we count down to a potential government shutdown, it is looking more and more like this might happen, unless, of course, the Speaker of the House goes back on a pledge to not do another CR. He was asked about it today on the Hill. We'll let you know where he stands on that and look at the chances of a shutdown with our panel coming up next. After world and national news, let's get you up to date right now with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. The U.S. is issuing a warning following the largest missile and drone attack yet in the Red Sea, carried out by Yemen's Houthis. The U.S. military says American and British jets and ships were able to shoot down 18 drones and 3 anti-ship missiles. Secretary of State Antony Blinken says there will be consequences. He's also expressing concerns about more than 24 people who've been taken hostage by the Houthis.
We know all about the hostages in Gaza. Well, the Houthis have taken more than 25 hostages from the ships that they've seized since this fall.
Blinken was speaking from Bahrain. He's in the Middle East trying to ease tensions and prevent an escalation of the Israel-Hamas war. Well, as the world's elites get ready to head to Davos next week, the World Economic Forum is out with a survey of the top 10 risks for the world over the short and long term. Bloomberg's Nathan Hager has more.
Topping the list of short-term risks, misinformation and disinformation. The forum's managing director, Sadia Zahidi, says it's a potent issue in an election year and with a slowing global economy.
If some of those views start spilling over into very different perceptions of reality when it comes to health, when it comes to what people are thinking about education, what people think about specific people, who then becomes the owner of the truth?
As for the biggest long-term risk, the WEF survey of experts and policymakers puts extreme weather at the top of the list. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks advancing. Wall Street traders, however, on hold in the run-up to the CPI data tomorrow morning, 8:30 a.m. Wall Street time. S&P holding close to session highs, up 15 right now, up 0.3%. Also showing a gain year to date on the Bloomberg, up by 0.02%. But again, right now, the S&P up 0.3%. The Dow up 57, up 0.2%. NASDAQ, the composite index, up 0.6%, while the NASDAQ 100 index is up by 0.5%. Down day for the Russell 2000. Small cap shares lower by about 0.1%. 10-year yield now at 4.03%, with a 2-year at 4.36%. Spot gold down $7 the ounce to 2022, a drop of 0.4%, while West Texas Intermediate crude oil is down 1.4%, 71.24 for a barrel of WTI. So it is an up day for the Dow, the S&P, and NASDAQ. Again, the S&P up 0.3%. Bitcoin now up 2%. 46,370 on Bitcoin. Mortgage demand across the U.S. picked up during the week, as we hear from Bloomberg's Vinny Del Giudice.
Industry data show mortgage applications posted the sharpest weekly increase in more than a year. We're talking new loans and refinancing. Borrowing rates are well below last year's roughly 8% peak, 6.81% last week on the 30-year fixed mortgage. There are signs the Federal Reserve is done raising interest rates in its quest to control inflation. Vinny Del Giudice, Bloomberg Radio.
NVIDIA shares up now by 2.3% after struggling for months to break out about $500 a share. Last year's best performer in the S&P 500, NVIDIA has pushed decisively into record territory with a 9.7% advance this year. Its market value is now more than $1.3 trillion today. NVIDIA shares up by 2.3%. Recapping stocks higher, S&P up 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
It is feeling more like the government will shut down a week from Friday, or at least begin shutting down. Remember, this is a staggered thing. Remember the laddered CR? We start running out of money next Friday, and then we fully run out of money on the 2nd of February. This is a possibility, unless, of course, there's a continuing resolution, which the Senate is now calling for. You think you've seen this movie before? I started the hour talking about my confusion. Maybe you can relate. Remember, Speaker Mike Johnson vowed in November to oppose any more stopgap funding measures. No more CRs, continuing resolutions, kick the can, whatever you want to call it. But Senate Republican leaders say, we're going to have to do this, guys, or the government is going to shut down. He was asked about it earlier today in a news briefing on the Hill. Speaker Mike Johnson, are you ruling out a CR?
Ruling out anything, committing to anything other than getting these appropriations done. And I think we can. And we're pushing everybody hard. I mean, they're working overtime and dutifully and valiantly. And I'm very optimistic we can get it done.
He says they're putting the pedal to the metal. But if you look at the number of days, what do we have, 5 legislative days or something? Pretty tough to think how they're going to get all these bills written and get things passed as we reassemble our panel. Rick Davis, Republican strategist, Bloomberg Politics contributor, joined today by Democratic analyst Caitlin Legacki from Four Corners Public Affairs. Caitlin, what do you see coming here? Because it's feeling like we're going to be talking about a shutdown right in between Iowa and New Hampshire. We should note Speaker Johnson met today, at least on the phone, with Joe Biden. He's also expected to talk to Donald Trump. What does that tell you about the outcome?
Not much. These things always come down to the last minute. They always look darkest before dawn. But it underscores the challenges of governing and the differences that, Mike Johnson is experiencing now that he's no longer a rank and file member who has the ability to agitate for these things versus a speaker of the House whose job it is to make the government function. So, we're seeing the Senate pretty uniformly across party lines saying we do need a stopgap. I think that, I hope that Mike Johnson will get there as well, and he's just got to figure out his internal politics. But this is the inherent problem with the House Republican Conference, which is that they've got, I think, a margin of 2 or 3 seats at this point. And they've got some very, agitated members who are willing to make noise. I think the one thing that works in Johnson's favor as it relates to the calendar is, let's say this does come down to the wire between Iowa and New Hampshire. There's going to be a lot of coverage on the presidential primary, and so he's going to have less of a spotlight on him to do what he needs to do to get this done.
Freedom Caucus not happy, as you might suspect, Rick Davis. Chip Roy says the motion to vacate, I'm leaving it on the table, because this is the same stuff that got Kevin McCarthy fired if he actually goes through with a CR here. But the new chair of the Freedom Caucus, Bob Good, cannonballed into a Republican leadership meeting last night. Well, I guess now he's invited to these, asking, why don't you fight more, to the speaker, and made the case, as he's done before, to not fear the shutdown. Does Speaker Mike Johnson actually pull the trigger on this, Rick?
Yeah, and to address Caitlin's, it's only darkest before it's dawn. John McCain always believed it was only darkest before it was completely black. And I think that's the scenario we're in right now. We're in a completely black. We got a rookie in the chair of the Speaker's office, who tried to move 2 appropriations bills before Christmas. Both of them defeated. There's no time for a rule. He's going to have to do it on a suspension. There's no deal made on what's in these things. And Chip Roy and his guys all want poison pills, which will be dead on arrival in the Senate. So I got to tell you, this is darkest, and it may get to completely black before we're out of this thing.
My God. Think of the conversation we're going to be having by the time we get to New Hampshire. Caitlin, to what extent will presidential politics influence the outcome here? Not just the calls with Biden and Trump, but the noise in the background.
I just think it's alarming when I'm the optimist in the conversation. But yeah, let's say we get to New Hampshire, Nikki Haley and Donald Trump are right now within single digits. I think it will come down to whether Nikki Haley sees the value of being a Republican candidate who believes that the government should stay open and function. But there is going to be a pull on her from the right to go out and get more voters from Trump that I think, if you're coming at this from a perspective of do you want the government to function or not, is probably not healthy. And so that's the real tension that she's going to have to deal with. But I agree with Rick. It doesn't look good. It doesn't feel good. But somehow, we generally figure out a way to do these things. But we've got a pretty tough hand to play right now.
We haven't even mentioned the border in this conversation yet this hour, Rick. It's all we were talking about leading up to the holidays and immediately coming out of them. They're talking about a potential tax deal right now between the House and the Senate Finance, House Ways and Means, in the $80 billion range that would revive the child tax credit, revive business tax benefits. We're not really having these conversations, are we, if we can't even fund the government?
Yeah, look, I mean, there's optimism that a grand bargain could be struck here, where the Senate, in its more tempered methodology, sits down with these committee chairmen and says, you know what, let's just throw this all into one big basket. We can get Israel funding, we get Ukraine funding, we can get tax cuts, we can get border security. We can throw in all kinds of other cats and dogs that could not make it through the legislative process last year and try to do it all in one big package. You may have to have some, level of government shutdown to force the final vote. But, that wouldn't be the first time something like a big omnibus passed that carried a lot of this kind of new legal work, new law that frankly could really move things forward.
Unless, of course, it is darkest before total black. Maybe it's the New Englander in me, Rick, that just seems to resonate today. We'll have some final thoughts from our panel, Rick and Caitlin, straight ahead. I'm Joe Matthew. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Alaska Air is grounding all flights by Boeing's 737 MAX 9 aircraft over the next 3 days as it awaits instructions from the plane maker and American safety regulators on inspections. Shares of Alaska Airlines, ALK on the ticker, they are down now by just about 1.5%. Electric vehicle sales in the U.S. hit the brakes in the latest quarter. Bloomberg's Tom Busby explains.
Charlie, sales grew by just 1.3% in the final months of 2023, the latest sign that many American drivers remain cautious about making the leap to battery-powered cars. Researcher Cox Automotive said a total of 317,168 EVs were sold in the fourth quarter. That's up